Hi guys, my name's Thaon Simms and welcome to the Limitless Podcast. Joining us as always is your co-host, Dr. Matthew Preston. Hail up the people and Matthew.
Hey guys, what's good?
Perfect. And as you guys can see, the man himself, Sir Randy Rowe, back on the podcast again after, by popular demand, of course. And we are the popular demand. We've been messaging Randy and so on. And I'm glad he actually took the opportunity to show up and have a little chat with us. So welcome, Randy.
Thank you guys. And I'm happy to be here as always. You guys, like I said, it's probably my favorite local stocks podcast.
Hey, love that.
My favorite local stocks podcast. I haven't done that episode in so long. So yeah, I get my sensible and interesting market views from you guys when I do get to listen to some episodes. So I love that.
I appreciate it.
Yeah, man. I actually have one up. I know on the list. I've been working all weekend. So I one up. I haven't got to list to it yet, but I have the 100 mil. At least I saw it in my feed, but I haven't got to list to it yet. The 100 mil portfolio.
I think you will like that specifically because we use your company heavily in that episode.
You use My Money JA.
Yes.
To track it. I love that. Yeah. I love it. I want more of that. And it's a great plug. I'm here. Let me work for you guys. It's a great plug for if you guys want to sign up for My Money JA.
So we'll leave the link in the description. But yeah, guys, use code Limitless. Thank you. But staying on My Money JA for a bit, right? So you are the CEO, from my understanding, right?
Correct. Yeah.
Yes. Tell the people about My Money JA. Let's plug the company in a little bit, because my understanding might be different from how you look at it. Because for me, it's not just like some people use it as a portfolio tracking tool, which we use it as, but we use it mainly for market analytics. I believe you guys have, it's real-time data on the JSE. You get like alerts, notifications, that kind of stuff. So tell us about it. How was building it?
So you well, that's two different things. So you're right in that you say you use it at the base for portfolio tracking, and the core of it, that's what it is. My Money J is about from the user's perspective, them handling their money. We have at this point 14 brokers in Jamaica, and somebody said it to me, and I didn't even realize until I said it, and I looked at it that there is no real easy way to see what your portfolio is at any other brokers, what your money actually looks like properly. And some of them have some really nice, pretty interfaces. Some of them have done some work on it, but you have little compromises that some of them make. Obviously, for a broker they're going to put things in a way that works best for them, their processes, and to make them look good, right? So little annoyances from, the name My Money. I can't if I spend $1,000 buying some stocks, you guys know, you have a bit more experience. So, if you buy $1,000, you have $1,000 and the stock that you buy is at $1. You're not buying 1,000 units. There's fees, there's taxes, blah, 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 right? What your actual price is different. I mean, you're not buying that stock at $1, really. I could be wrong. I don't think I am, though. But most of the 14 brokers, you can't even tell what your portfolio is. You have to call somebody and they'll send you an update, right? Then the ones where you can tell what your portfolio is without having to call somebody. How that portfolio is laid out is not always in a way that is best for you. And again, I understand it. Most of these brokers aren't just doing stock brokering, right? They're doing a whole heap of other things, and it's not necessarily. Sometimes it's not even at the top or near the top of their list of things. It's just a service that we offer. And so they don't put a lot of energy into it. My Money JA is energy that is put into it. Like the dream that's in my head for years, helped brought out on paper by me, and not just me. I have a co-founder, I have a team that we've brought out over the years, and we're continuing to refine it, right? And so at the core of it, it helps you to see what your money in the market looks like in a real way, in a real way, like how real people talk about things. Because here's my thing: if I put the grand into the stocks at $1, I don't really buy them at $1. They're at $1 plus taxes and fees, blah blah blah. And when I'm selling, let's say it goes up to $2. When I'm selling, I'm not gonna get $2 grand out either, right? There's also taxes and fees in that. Very few, if any, entities pay attention to that upfront, because it's also not a pretty picture. You don't want to. It's a weird thing where if you have a business, the second a customer comes through the door, you want them to feel happy that they've done that, and you want them to feel happy throughout the journey, right? Even if something bad happens, like you go to a nice restaurant and the food didn't taste good. Don't worry, we're taking it off your bill. You wonder, how the hell are they able to just take it off the bill? We would rather you feel good. This is one meal you have to eat every day. We'd rather you feel good about being here and come back than pay us for something you didn't like, right? That's a general example. Brokers are just a different kind of business. So I don't want you to feel bad, even though it's not. It's just how it works. It's just the math of it. It's just how the market works. I don't want you to feel bad about the $1 IPO that you just bought. But I realize that you didn't buy it at $1, right? Worse, when it go 103, I don't want you to feel bad, realize that you're not reading profit yet, right? I can very technically, it's not a lie, because I can't lie to you legally. It's not a lie. I can technically say, hey, you're up 3%. Oh, I'm up already? Yeah. Until you say, if you dare sell it at 103, you're not selling it at profit, right? You might sell it at 105, you're still not selling it at profit. But I don't want to be the guy who have to come and tell you about the buy fees on the buy side and the sell fees on the sell side. And that's kind of annoying. And so it's easier for me to just not tell you about it and tell you one, till you look at the market, know what the price is. When you go up to 103, 105, 110, 2, hey, in profit, you handle all that on your own. We do it for you, and we are the waiter at the restaurant carrying the food out for you. I'm not really cooking the food for you. I'm not setting the prices. I just in the middle. Please leave me a tip, except my tip is baked into that thing also, right? That's where they are. We at My Money JA aren't that waiter. We are like, hey, we have a restaurant and we have the kitchen open to you. So if we do something bad, you can see it. If we do something good, you can see it. And this is the thing that we care about. We're like that restaurant that have 5 things on our menu. We do 5,000. So those 5 things, we want to knock them out of the park completely. It may be different if we were doing a lot of what the other houses are doing right there. Pensions, they're doing real estate, they're doing day-to-day fund management, they're handling hundreds, if not thousands of customers, and they're handling staff, they're doing all of that stuff. So where we are able to have a really good effect, and why we're able to have a good effect is that we are in a niche that we love, we know, and we want to see grow, and so we concentrate heavily on that. So at the core of it, we are portfolio tracking. At the very, very core, we're here to help you track your money, My Money JA, right? And then at the next steps, you guys also touch on the other parties. Once you start doing this investing thing, you realize that you don't want to approach it like cash pot. No, not the cash pot. You don't want to approach it like cash pot. You want to approach it like, you want to approach it a structured way. You're not guessing here. And part of that prevention of guessing, as you guys know, you both done my girl course, you know, I'm big on is the research. And so I also always needed a place where you could do research. Recently, I gave a speech to the Kingston, to not because I should know it off the top of my head. Do you remember it, Thaon? I don't know if you saw it.
I think it was it Kiwanis? I'm pretty sure it was Kiwanis Club of Kingston. Yes.
Kiwanis Club of Kingston. Thank you. Yeah. Shout out to them. I in talking to them, especially after it, I was just going through it and I was realizing, I was remembering how hard some of the things that I was doing easily used to be. I remember long before any of this existed, how hard it used to be to compare 2 companies' PE ratio. You have to sit down and work out both of them PE ratios yourself. And then just to know which one of them have the higher or the lower PE ratio. If you're good, it's going to take you 10 minutes. If you're not, if you have something set up, it might take you 10, 5. No, it's opening. Just look on My Money J. It's that simple. And then things like going back into earlier research, looking at older stuff, looking, what was it like last year? Okay, so the receivables line here is higher, but how much is it higher last year? Because they only gave me a percentage in the financials. They didn't tell me the actual number, so I have to go back and check. It used to be so hard. Now My Money J, just hover the mouse over it. Things like that, things that make the research process easier. And then on the other side, because it is tailored towards my life and the life of busy people. If you don't have the time, if you don't have the time to be in, you love the market, you want to invest, but you also have a 9-to-5 or life or anybody else, right? You need something to help you speed things up. And that's what this is. It helps you to speed up a lot of that. The research process can be done from your cell phone in seconds. You can know when a share hit a share price, you get the alert immediately in the app. You can know what your dividends are at a glance, right? And you can know it's accurate. That's another thing that we accidentally fell into, where we have become like the checker for
Robin Hood.
Yeah, well, God, fingers crossed. But like, you know, I have multiple brokerage accounts, and I think many people have multiple brokerage accounts, and that's another thing where broker 1 is not going to partner with broker 2 to have you see what your real thing is. Broker 1 knows about the assets that you access through broker 1. and broker 2 is your competitor. We don't compete with any broker, so we have no issue allowing you to see what your real Carib Cement shareholding looks like, even though you have it across 3 brokers. Right? You have Trans Jamaica at JMB, you have Trans Jamaica also at Barita. Well, most people don't even know that they may not even know what their real Trans Jamaica pricing is and where the real Trans Jamaica profit is or whatever, right? Because that's 2 competing brokers.
So they bought at 50, like one broker bought at 60, and then depending on how many units they bought.
Exactly. Yeah, it's something that it's a thing that most people didn't even know that they needed until they see it, and you can't do it without it, right? If you understand average pricing, being able to see your true average price when you have bought it multiple times, sold it multiple times, bought it in multiple places at multiple prices. People don't even know that they need to track it. They just think, oh, I'm in profit over here, but I'm at a loss over there. So let me just not look over there. But no, you might actually be, that's a very common thing. You might actually not be in profit anywhere, or you might be in profit. Well, it's just you. So there's really just one place for you to be in profit, but you pretend that it's in 2 pieces because you see it that way. So My Money J is built to allow you to pay attention to your money in a central location.
Nice. But technically, you could do a lot of these things with things like Excel, but then not a lot of people want to sit down and do that and like do the calculation in Excel. So,
exactly. Yeah, it helps with that. Great. I mean, it started out heavily in Excel. I am an Excel person, so I enjoy using Excel for some of these things. And there are other people who like Excel, other tools, a script. But when you actually AI. Start doing it, no AI. But hey, as any of us who use AI know, at least maybe for me, the number one concern every single time I use AI is it accurate?
Are they hallucinating or not?
Because they when they're hallucinating, they're not like humans when they hallucinate. They don't look very obviously hallucinating. They hallucinate very confidently.
Very, very factual-ish.
Man, they will show you evidence from multiple studies that 2 + 2 is 5. Right? And then when you show you that 2 + 2 is 4, well, I'm sorry, I got that wrong. I shouldn't have gotten that wrong. But if you don't know, imagine you making investment decisions based on something that's incorrect, and it's gonna do it confidently incorrect. So that's a concern. So My Money J is built to help regular people keep track of the market, their portfolios, and people who want to go deeper into it. It is a tool to help you go deeper, and that's what we've been working on. I think you guys probably, my national anthem I feel sometimes is we have so much more coming because we have been building and we built out. If you look at screenshots of My Money J 4 years ago versus now, and the stuff that we do have coming, and we've been working throughout all that time on putting together infrastructure to be much bigger and much more comprehensive. So look out for that. Yeah, look out for it. And
any things you want to share with the viewers?
Not yet. No, I've gotten so careful about that. But not just yet. I'll share with them that if you sign up at mymoneyja.com/limitless, you get 10% off any of the packages that you choose. And you get one of the early seats on the stuff to come. One of the early seats on the stuff to come.
Any timelines even? You don't say it.
This year. We have a lot coming this year. This year.
As in like summer this year or like...
I don't like summer. Shout out to Jamt. I don't like shout out to endless summer. Yeah. But this year, I don't want to tie myself down to any
Jamt said it was this year, so...
Did they? Again. They've said that for 3 years in a row now, or 4 years in a row now.
It must be this time, man. It must be.
No, actually, wow. They've been saying summer from
2021. I think it was 2021.
No, 2021.
2020. Because I remember in 2021, they said that COVID, they did a split. They split in March 2020, which was when COVID also hit. So, they and that split was in aid of that whole move and spin-off and blah, blah, blah. So,
and up to now,
5 years are waiting.
Still waiting.
If you're on it that way, why? Damn.
Yeah. If you're in it, it's rough.
Yeah. Well, not really.
It depends, how you though.
Yeah.
I mean, from when they said they were splitting, that price was trading at around like what?
Oh, that's you mean
$4 or so? Yeah. Like
but no, man. If you split, because I'm a Jamt shareholder and I've been in Jamt since, I know I have some from 2021. I've been in Jamt earlier, but in and out. I've held some Jamt since 2021 though, early 2021. And I am up 65% on that. Yeah, I'm up 65% on that. My average price is at $1.40. And they've split like what? 2-3 times.
Yeah, good amount at least. I think at least one time since I started.
Yeah, they're one of my long-term favorite. I hate that term, but they're one of my long and short term. I hate, but they're one of my favorite companies in that I get the impression that the people behind it actually invest also, right? So they know the market, and so they have done things. They have provided, I think, a good balance between what every company should give, which is the financial performance, actual output of the company. They pay dividends, and they do all that while also, in my view, keeping an eye on their share price. They care about their share price. They're not only acting in favor of the share price, but they care about it. It's part of the decision matrix, I think.
So you think about QWI then?
That's part of the Jamt group. As part of the Jamt group, I'm also a QWI shareholder.
I'm a shareholder too, but I'm saying even like the share price, because what did it?
Let's see.
I think the IPO at like $1.40. And it's below $1.
135 around there.
I don't think the NAV has. Well, I think I was checking it the other day. Even because they have that US market side, and I think that like with the Trump and tariff stuff, because I was noticing, the NAV dropped a lot.
Yeah, I don't think Trump and tariff stuff.
I don't know, like what else? No, but what else? Well, I didn't like check it, but even just off my head, the kind of based on what I know, because we did an episode on Jamties recently, you guys should check that out. Like the kind of holdings that they had, I don't think other things have dropped that much to really justify that. So my only, just off my head, I think it likely is the US side.
Well, the US side is not just the US side. The US side has given them hits and then successes, because if you're thinking just along the lines of reporting, because I do also track their US side. I do also track the US side. One of the biggest holdings is NVIDIA, which gives them great gains, right? But apparently,
the tariffs.
No, it's not the tariffs, man. It's not the tariffs. No, like as we speak, yes, the tariffs.
As we speak,
you guys are doctors. I don't know if you have it the way I have it. Like when you get into the realm of where I'm talking like this, like the investing is my realm. So I view things differently there. Like I will rate a business person generally, but when it comes to investing, like you have a higher mark to hit, in my view. And I said that to say that I don't they do seem like active investors are actively in the market. I do see their footprint in the market, but I don't think the man them really sell like that, right? So like I don't think them sell them NVIDIA when it fly gone how much last year. I don't think they cashed in.
Yeah, they don't really. They're not very
active with trading.
Yeah, they're not very active. So like how like we'll see. I was just like literally today. There was Chris Camillo, right? There was a podcast he had with this guy called something Wisdom or Words of Wisdom. And there was a story he spoke about. He was saying that, he was in this play and it was like some sort of, I think it was a doll or something like that with, I think, Frozen. And it's like he had got in when, he was saying, this is going to be a big game changer or whatever. And then, they report record earnings. And then he was like, and the stock had already moved up. He was already in profit. I think he had done options and he had said like his options were up hundreds of %. And he was like, I'm going to make tons of money. But then at the same time, this large institutional investor who owned 10% of the company sells 10% at that exact time and the stock just drops. And then I was thinking I was like, wow, that's so real, because I thought about MJE and like Lumbo. Do you remember like that was the same, basically a very similar situation with Lumbo, drops their record report. I think it's probably their best report yet. Everyone is like, this stock is going to the moon, like, oh my god, and then bam, they sell. And I was like, I remember looking at the time, because I own shares in Lumbo, and I was like, damn, I can't believe they did that. But then when you're playing at that level of money, that's the kind of things you have to do. Like you have to be that person selling into that high demand to like actually exit your position. So then I was thinking, I was like, wait, that's the kind of things that I would want to see a fund manager do. But like I can't really think of any other broker other than Mayberry that would actually do that. So but then like QWI, like I think we were talking about them and even Access. In recent in our episode, we were saying that, wait, you realize that they bought Access in 2019, I think, at like $32 for
heavy offer for sale. Yeah, the heavy offer for sale. Yeah.
And if you look at how many shares they've bought, it's probably not even $100,000. And the stock is down 50%, and it's been like 5 years, and they're still saying it's a good stock. So I'm just like, it's so good. Either you sell it or you buy more. Like they've literally held down 50%, yet they're saying it's so good.
Okay, so I'm with you. Obviously, you guys have heard me say some of those things before, so obviously I'm with you. But they are active in the market. I don't think they're active in the way that I'd like. But again, that's because you're in my realm now. A footballer who plays, seeing another footballer play has a different want than somebody in the fans, right? It's some fans in the stands. So I would want them to do certain things, but I'm not in the driver's seat. To say, I'm saying that to say that they have other factors that I'm sure we don't even know about. No, cool, I don't know about the factors. I can only work with the factors I know. I think they could do much better. You touch a big one. That's their biggest holding, I believe. Access
and it's literally dropped down like 50% for like 5 years.
And which hit the books of Jamt heavily the year it had the biggest fall.
Yeah.
But I don't think that the response to it has been the best. There are things I think that they could do in that. Yeah, there's things I think they could do or didn't do. But again, you have to then remember. Well, not remember. I don't know how the decisions at Jamt are made. And what I do know is that the second more than one person is making the decision, it gets more complicated, right? The second more than one person making a decision, it gets more complicated. And even if it's just one person, once they have to consider multiple points, it gets more complicated. I'm not making an excuse for them at all. I just I play in devil's advocate and saying, let me give them the room to say that I don't know everything that could be happening. But now looking on the game, just talking about the game itself, no, that's poor in my view. Poor.
Yeah.
Poor. I think QWI is wasted talent in my view. I think it's wasted potential so far.
They actually have some pretty
decent,
good holdings.
Picks.
Yeah, like GK, Cement.
Yeah, and they are active in the market. They're not as active. Barry makes it hard. Barry sets a high bar for active. I don't think any other fund
that lumber one, like I look back
at lumber.
That,
there's so many other stories. Yeah, there's so many other stories. There's
Lumber's
so many other.
The one that stands out to me.
Everybody
I was in it.
Yeah. Like, hey, I saw a thread. Oh, finish your story and then I'll go out. I'll go in.
No, I know exactly the thread because the same. Hold on, the same thing Randy's talking about is carb cement. I'm pretty sure it's a carb cement thread you're talking about, right?
Yeah, that's the same famous carb cement
thread. Wait. Yeah. I think I know which one you're talking.
There's only been one viral, if you will, carb cement thread. So it is that viral carb cement thread I'm talking about, which it was funny to me about, no joke, about 10 different people screenshot it or send me the link talking about it, right? And for me, it's a funny thing because shout out to the girl subscribers, people in the girl group. I'm sure they're watching and listening to this stuff. The difference was because I also mentioned it there. And the difference is in the quality of the conversation and they're seeing it. And then privately also, it's just a reminder how the market is, because what people think happens on the market or what people think actually happens on the market versus what actually happens is sometimes so wonderfully close, but also so vastly different. Sometimes it can just be one or two little elements different, but how somebody describes it's like, somebody describe an incident that happened, like accident or whatever, and they miss one little detail and it changes how they describe the whole thing and how the person's hearing them describe it react. So that thread stood out in my mind when you're talking just now, because yes, at the core of it.
I'm really trying to find this thread because I want the people to understand what we're talking
about. That's when
he
was like, Cimex says a royalty and the stock is now cheap or something like that.
Yeah, he's talking about that and how he mentions a lot of such man, which is very Jamaican, very funny thing. Very Jamaican. So he's talking about such man thing and the buying at this price and then selling at this price after holding it and not mentioning how much the loss is, which is something I realize a lot of investors do. I empathize more with that sort of thing where people hug up that loss and, like him say, it was so big it was almost a shame. Them don't want tell nobody about how much it is, what it hit.
And then hold up that loss for a while too. It was like a
and
while.
Then finally quit. Finally get out and then check it the other day. Boom, it's up. Like what's that, 30 odd, maybe 40 odd % from where he sold it. And I look on that and the grower lessons in it are massive to me, because that's an avoidance of profit because he thought it was a bad thing. And he thinks it's a bad thing because of your approach. Now, not knocking the person and what they go through. And it was a funny thread too. People liked it.
Yeah, it was hilarious.
It was hilarious. But it's even more hilarious when you understand or think you understand some of the factors behind it. Because I saw that accident. I saw that story from a completely different angle. So this is like a story that I know about. Imagine, I will put it in you. So imagine I'm in a car and I have a car accident, and let's say I was in a car and like so other people in the car with me and they're playing around and they throw something and it hit me and I'm trying to get them to stop and people being wild and it hit me and so it caused an accident. But my car tinted, nobody don't know. So a bystander 2 or 3 years later tweets about this accident that they saw in halfway tree and I'm realizing that it's not my accident that, but they're describing it completely differently because they don't know what was happening in the car. That's what it was like for me. And also it is a view on part of the change that I'm glad that you guys are bringing to the space, that I've helped to bring to the space, and that I want to see more of in the space, where because nobody talks about this stuff, those stories remain very quiet stories, so nobody don't really know what happened. I'd love for it to be spoken of more, but I've done my part in carrying a lot of the weight of these stories. I don't know how much more I carry. Sometimes I do what I can. Let's just say that whole thing was completely different because I know that story from inside the car. That's not to say that I don't have the hundreds of millions or made hundreds of millions in there, but it goes back to just an understanding of the market, an understanding of investing, and how many people this thing touch without you even always realizing it. And there's another point in there, around the access and the fund management and what active, aggressive, if you will, fund management looks like, and what I would want to see more of QWI doing. That's what I'd want to see more of QWI.
You're like activist investor, like taking a stake and then changing management and those kind of stuff?
I don't know if I'd love to see that across the board, including us. I'll tell you, my hope is for us, guys like you, guys like me. I'm already doing some of that. You have to use that quiet pressure. When it comes to the market, I don't take talk. That's the truth. I don't take talk when it comes to the market. I've been in it long enough now to know and know what I don't know, if you will. Know what I know and know what I don't know. I understand there's a lot that I don't know. I'm always learning, but there's also some things that I know. And when I realize oftentimes that most of the conversations are with people who don't actually even know. They haven't even achieved the base level. It has changed a lot of how I view it. So I don't take certain talk when it comes to the market. You won't even always like some of the things. It's not for you to like. It don't change the price of the stock, right? It don't change the price of Carib cement in the market. But the people who can change the price of Carib cement in the market, I pay a lot of attention to them. And those are the what I said, the man in the arena, or the men in the arena, the women in the arena, because it's not just men, the people in the arena.
Truly. Yeah.
So what I'd love to see more, yes, activists, but I have that for us. I say that we are the medium-sized funds in the market. That's a presence in the market that hasn't really been spoken about and is growing with us, people like us. But from QWI specifically, I would like to see more of that sort of active thing. Because you kind of said it. I don't want to tell too many tales. I'm not really interested in telling my whole view of the accident, quote-unquote accident. But what I will say is that I believe there's active fund management being done in it. And there are not that many active, what I call active, aggressive fund managers on the market. I don't know if it was you, Matthew, or Thaon, who said it earlier, that you have to actively, like you have to sell into certain things. If you look at the level, Mayberry sold a lot of the shares in the Carib cement thing. They sold a lot of shares. Shares were held for a long time. But they sold the thing when it was headed to over $100, I believe. It was on a spike. If you look at the history of Carib cement and Carib cement share price and consider yourself to be actively and aggressively managing your fund, you'd be looking on a once in maybe 15, 20 year history event happening where there is enough retail pressure for enough units for you to encash tens, if not hundreds of millions, tens of millions in profit. And I'll be very careful. I'm going to say this in quotes, for no fundamental reason, not for no fundamental reason, but for shout out to JMB, for no, like, if you are aware of what's happening in the company, you have a stake, you have an interest, you've been following it, you've been eating, but you're not really eating dividends because the thing wasn't really even paying dividends for like 17 years. But you're following it and you see the spike, and you also know that on my radar, there's no real reason for the spike outside of, yes, the results are good, and yes, there is an interest now, but just bring it back to the time also.
I mean, there are a lot of good things going on too. I mean, they reduced their debt, the prospect of dividends as well.
No, man, for me, for Carib Cement at that time, the price it rose to was completely justified. I can justify it fundamentally, completely, including for the first time in 17 years, they were about to pay dividends. Now, it wasn't immediate they were about to pay dividends, but we don't buy stocks where they are now. We buy them for we expect them to be, right?
They're forming a committee.
Yeah, exactly. Yeah, I mean, it's a bit of a delay tactic and all that rubbish, but you also know that it's happening. It's more likely to happen now than it has been for the last, at the time, 15 or 16 or 17 years.
Definitely.
So I think the difference was that there was a greater retail presence. Again, us. In the market. But you saw that thread of somebody who's in the market. That person bought, you said they bought during that time. That person had been buying stocks 5 years before or 10 years before. So that's an example of greater retail presence. So imagine yourself as an active, aggressive fund manager in the market, seeing a spike. The spike itself is not something that you're unused to, but the sustained spike in something that is for you extremely cheap. So if you bought the thing, if you have the thing averaging $9, $10, $11, $12, $15, and you see the thing spiking up to $100, I would posit that it is actually irresponsible of you as a fund manager to not cash in on that.
Yeah, realize some profits.
Because you are not going to get the opportunity to purchase, to sell 5 million Carib Cement shares
at the peak.
But you don't know what the peak is. But if you are big enough, it's gonna be the peak because it's about to go down, right? Once you click sell, that's a difference. How I say when I talk to Bridget, I say, you're not. The market isn't happening to us. We are the market. So it's not like, the price is doing this. And it's not magic. We are the market. If you are an active, aggressive fund manager, if the QWI, if I was running QWI, I can say that. If I was running QWI, and that Carib Cement situation was happening with QWI, I would not be doing my job if I didn't sell some. Yeah, because what other opportunity are you going to get to sell 20% of your holdings for raw cash? Half of your holdings. Suppose you wanted to even get out of the thing, but you couldn't, right? Like we have held it for this long. It has been such a loss maker for us. It has dragged us down for a long time that we had to really build up the fund around it and move on. And we would have sell it if we could, but we couldn't really find anybody to sell it to. And you'd say, okay, something like that, you keep for the dividends, but the damn thing not even paying dividends. So what's the point, right? Now, if you're in that situation and then suddenly it's spiking and you're looking at how much X profit, you are irresponsible if you don't sell into that demand. The demand literally has to buy from sellers. You are one of the owners, and your ownership involves managing a fund. You kind of should be first in line. You are not doing your job if you don't do that. And that's my view from the deep football fan, quote unquote, view of QWI. Yeah, the man need to be, in my view, hungry. They need to be more aggressive with their holdings. So you can't do it in the US market. You're not even going to budge the US market. If they tell me them sell the Nvidia late last year, January of 2025, or even 2020, if they sell it last year and take all that cash and dry up the supply of access, I'd respect them a whole lot more in terms of what I'm doing.
Real. Or even buy back their shares. Like they said they
would. They get me started on that. But that's funny, hey,
I mean, they got approval.
Yeah. Get them approval.
They got shareholder approval.
And they're fun. There's so much you can do that they don't seem to be doing. Hey, you touch QWI, I'll tell you, is one of my. I want to even say, I believe I have a pet theory that they're gonna be bought. I believe Jamt is gonna sell QWI. I don't have any reason other than my own research, connection of dots, and my gut feeling saying that,
as in sell all of their stake.
I think.
So then why spin off? So then they wouldn't spin off Caribbean Dreams then. Because then if they already close the real estate, and if they sell all the stocks, then Jamt would just be manufacturing. So you wouldn't even need to really spin off Caribbean Dreams. Unless you're saying sell part
none
of
this is being done. None of this is being done via need. None of this is being done via need. Look at this also. Shout out. I don't like shouting out my own thing too much, but shout out my money JA. So these conversations, we've had them for years. I've had them for years. It was not ever this easy to go. Just check how the ownership of QWI looks, right? So Jamt owns less than 30%. No, as I say, less than 30%. Directly, Jamt owns, but then through KIW, they own like 17, blah, blah, blah. And if you've noticed, it's another beautiful thing about my money JA. If I could share my screen, I'd show you guys where it's that Jamt has been buying.
Yeah, I think they bought. There was a connected party purchase recently.
Not just recently. They've been buying. I've been watching it for a while now.
They've been buying.
Yeah, they've been buying. They've been buying QWI shares. But not forever, just relatively recently. Like over the last few quarters, they've been buying. Yeah, you check that out. So yeah, so if you just go back one quarter, look at that, and go back another one.
That have been Q2, that's 3 mil units. Q1, 5 mil units. So they bought.
No, go keep going back. Keep going back.
I mean, mix. They didn't buy that quarter. Q3.
They didn't buy it. No, there's no more. So come forward and you'll see.
Oh, so you're saying it. Oh. So now when did it start? So that's Q3 2023, Q4 2023, and it started, it started Q1 2024.
Did it? Or did it start it started Q2 2024. Sorry.
March.
2024. Q2.
Oh, well. Oh, yeah. I guess I'm saying calendar year.
Yeah. Okay. Sorry. Yeah. So Q2, their Q2 2024, they started purchasing millions of units of QWI, aka about a year ago, started to buy. And who else started?
How brilliant that is? You meant that they were able to sell. Wasn't it for QWI? Wasn't it? It was like an offer for sale, right? Or it was an IPO or a mixture?
It was a mixture. They wanted to. It was a clear IPO because they created an entity. So QWI had
I'm trying to see if they offered. I'm wondering, did they offer some of their shares for sale? Because if they sold it, it was like $1.40. You're selling the public something at $1.40, and then you're able to then buy it back from the public at half a price.
Where does that register on the balance sheet? No, that's a real thing though. No, it is shareholder value. I'm not knocking it here. They're talking my real talk now, where you're touching on a nice point where they would have assigned a value then, a very public value. It is a subsidiary, so they don't book it. It's not like it's going through the P&L, not yet anyway. But yeah, being able to buy it back at this price, you see how easy that is? Because I also have that up on my screen. You see, just the ease of doing that. Yeah. Just the ease of doing that makes a world of difference. So the IPO was at $35, and it was. Are they issuing just to refresh? I know there's a consolidation of KIW and blah blah blah. Let's see. I think it's all issued, right? Yes, all newly issued QWI shares, and the entire proceeds will be used for investment purposes. But it doesn't negate your point. When this is QWI, when this happened, it had an effect on what Jamt booked. And Jamt is who you've seen buying back those shares, not QWI. Jamt is who has been buying back those shares. So,
and I think directors too.
About a year ago, I remember we are working in the dark. They are not. They know their plans, right? They know their plans. So why would they suddenly start buying back their shares? Why would Jamt start buying back its subsidiary shares? It's not like in 2022 it was higher. It was higher than IPO, so it didn't make sense. It was kind of the same price. Why would they have been doing that?
So who do you think they're selling to?
That's a good question. Who do you think? Who would find a whole lot of value in purchasing it?
Barry?
I mean, it's always easy to pin the godfather of the market, pin everything on him, right? But maybe MJE is the largest.
Who do you think has that kind of money though? Like, how much is it?
I mean, Barry has it, but hold on. MJE is the biggest owner of QWI outside of the family, you know. Outside of the founders, you realize that?
Yeah, they were buying
Jamt is number one, and number two, and number three is Mayberry. Another fund is the third biggest owner of this fund. So I've been quietly looking at this one, and it's a pipe dream of mine. If you go into it, because if you look at it, I think MJE bought in, or appears to have bought in about calendar Q4 2021. So they bought.
I remember Barry was tweeting about it once, like he was saying that, if you're not a stock picker or something like that, QWI is actually a good buy. Like he was tweeting that.
He said that, not MJ.
Yeah.
was it in the fourth? Was it in the fourth quarter of Was it in the fourth quarter of 2021?
Boy, I don't even remember. But I guess someone could check.
But yeah, but it's a good that's a good point to look at. But yeah, I look at it and I think it's a wonderful. There are wonderful details in there. I don't want to lose too much time going into it. Yeah.
Even with the buyback set out, I think it's arbitrage. Yeah. Even below, that's the reason I bought. When I looked at it, I was like, wait, I think the buyback clause was 85% of the NAV, and the NAV is $1.13 with the little drop now. So what does that work out to?
85% of that?
That's 96 cents, and it's at 79 cents. And then people don't realize it's a cent stock, so it's like the gains. Like if you don't work it out, you may not actually realize how much you could gain from that.
Exactly. That's another thing that my money is around for, to save me the trouble of always having to work it out that way.
I still always I remember like we kept having conversations that I thought I think it's not set up that way. But I guess in my head, like to me it's like, wait, I would prefer that if I'm looking at the buy price, I'm looking at it at 79 cents. If the NAV is 13 cents, you work out the gain like that I could make if I buy at 79 cents and sell it at NAV. I know why you said you didn't do it, but like in my little database thing that I have set up, that's what I have.
Sorry, I want to be clear on what you're saying. In terms of the comparison?
Yeah, like I don't know if you guys still have it that way. So if you buy it at 70, there's a difference. I hope I'm explaining this right. If you buy it at 79 cents and sell it at the NAV, $1.13, there's a whatever % gain. But then there's a difference when you're saying the discount.
We compare the NAV to the it's at the right of your screen there. We compare the NAV to the share price, the current share price.
Yeah, and as I say, I understand why you guys do that, but in my Notion stock stuff, I set it up that way that it will show that, so I can work out the gain and be like, wait, does that level of gain?
The gain in terms of the profit if you buy it at what?
What do you close price? And where to sell at NAV.
Okay. We reverse it. We used to have it and we reverse it. Yeah. That's maybe a bit of a request that also is that more general thing. You know, it's on like the overview page. We track all of the funds and their NAVs versus share price. So it's to say, above or below. And I think it's it tells that picture very quickly to say that every single fund is it trades its NAV is above its share price.
Show an average.
An average in terms of what, the average NAV
or the average discount, I guess.
Like the discount.
I could, but
I like that idea. The 1%.
It's no. There's also that we could do a whole episode. I could do a whole episode talking about just the my money JA side of things and the difference. And like I say, so one thing when you talk about, another thing when you get in the seat. And I said to somebody who talked about it and then got into the seat. I have to think about everybody. Now, what you're saying, Preston, you're not necessarily wrong, because there are things on MMJA that, and on my own personal stuff that I do in a way that it's not done that way on my money JA, because I have to think about the broad base, everybody versus how I want it. Now, you're thinking aggressive like me, so of course I want to see that, right? Just like you want to see that. In fact, for my own personal thing for QWI, it is at 85% of the NAV. When I do myself, I did that 85% of the NAV.
I did so I have that in my Notion thing, but I think I'm not seeing it now. I had done a line. You know who you guys? I don't know why it's not showing.
I don't know. You should share the notation when you do that. That's also a great thing that we do. I don't think a lot of people utilize that. We haven't popularized it, but you can make a notation on the chart and then share it. So you can tweet it or put on IG or whatever. Like whenever you do any notations on the chart, if you just hit the share button,
it's there. Yeah. I don't know. I had to like hide it and share it.
Okay.
Yeah, but the thing, I guess at the time that I did it, you can see when I did it, the NAV.
The
NAV was $1.03, or the 85% of the NAV was $1.03.
$1.03, yeah. That's when we're like at the 125 thereabout levels. Yeah. And that's to me. To me, it's a great. If you're considering it that way, it's a great buy. And then remember. Going back to the girl concept, you always have to care about what the driver of the vehicle cares about, because you're not driving, you're in the driver's vehicle. And so I think I made the joke about balance sheets and so on all the time. And like, you can't tell me, strong balance sheet, I can't pay my light bill with strong balance sheet. But some companies can.
Yeah.
All right. And when you consider that, when you consider that, it changes how a lot of things look. And then you might say a little bit of why. If it's easier for me to go around it, I just say, if you're considering, my pet theory is that MJE will buy QWI. All right, it makes sense in my view for them to do it. Obviously, in my view,
takeover bid.
Yeah, or just buy Jamt's stake.
Yeah,
I mean, they own right now as we're speaking, they own what percentage of it? As at last report today.
So up to December 2024, they own 3.6% of it. Yeah.
3.6%. And what percent of it does Jamt own?
Jamt is like 28%, well, directly.
28 directly. And KIW, which is a quote-unquote dead company, owns another 18, 50 odd percent.
So how much is...
No, if Jamt, if just those two top points there, that's what, 40 odd, almost 27.69 plus 17.95. And you're looking at 45.64, and Mayberry owns 3.6, right? So you're looking at 49.24. So if Jamt were to sell its stake to Mayberry, Mayberry would immediately own 49.24, right? Then that means that if they buy another 86.86, they immediately have to do, in fact, they buy Lloyd Goldson's stake or David Stevens' stake.
Yeah, isn't he like
who is
director
who's on the board? Yeah. So if Jamty,
John Jackson too.
Yeah, if Jamty, so David Stevens is on QWI's board. So if Jamty decides to get rid of its QWI, to spin it off, to cash it in because they're going back to core, which if you follow the last 5 year saga of the Caribbean Dreams thing, you'll realize how many times it came up that part of the given reason for the spin-off is, we're trying to
focus on manufacturing.
Yeah, we want to look at our core. The local investment space loves the idea of core business. And there's something to be said about focusing on your core competence, right? If you go, I'll give you one step first that we spoke about at the advanced grower, I think maybe 2 or 3 advanced growers ago. If you look at Jamt's actual breakdown of their numbers, the cost, they have put a lot of work into the food side of things, partnered with the Cinco. They try to push the exports harder, but all of that can be wiped away like that by the end of the quarter. Somebody put in a big sell for a big sell for Access Financial, and the share price drop, and boom, they have to book a loss. So you have an entire set of teams, you have an entire factory, you have all of that's happening that can be wiped away by one crappy market investment decision. And then you have to report something where it's almost like the hard work for that set hasn't been seen. Not many people are going to go into the depth of the numbers like that. And even then you have to tell yourself, say, oh, remember, this is a great food company. Yeah, but they can end up with losses from just this. So I could see a company saying, hey, yes, we're good at investing. Yes, we've done this thing. Yes, we've done a creditable thing. But let's sell the investment side to an active investment company, and let's concentrate on our food, which we're doing a great job on and growing, and a stellar job of growing, right? We've already kind of shuttered the real estate business, as you guys mentioned earlier. Shuttered the real estate business. They're not doing the construction anymore.
The thing is that they're trying, but
they're trying
it's like they're selling slowly. Like they probably have another 2 years plus of selling at cost, which is not really at cost.
To do what? To get rid of the real estate?
Yeah, they still have a lot. I checked it out in our thing. Like there's still a lot of properties left. And when you actually check how fast they're selling it, it's very, very slow. Like sometimes
these things don't always go how they look. If they want to get rid of it, they can. That's
the thing. Like look at I guess like I draw that comparison to like even them with Access. It's like they kind of seem to like hold on to losses or hold on to these stuff. So I don't know for sure. I was always saying that if I were them, I would just try sell it at a bargain, just get rid of it, get off the books, the real estate stuff. Like maybe take a slightly bigger dip, but you don't like. It is better to have the money up front so that they could do stuff. I'm like, they could have bought stocks, they could have, built up their manufacturing or whatever. But I guess we'll see.
Yeah, I don't know. I think we tend to talk about these things as a completion of the thing. I don't have to actually sell them to not have it in my group. you know, hey, you have a son that's doing the real estate side of things and that's his thing. He can put together an entity and sell it to the company. The company can sell it to him, and whatever price we're at there is the price that we're at there. We can even sell it to him at profit. We don't have to, so we don't have to book a loss. We can sell it to him at profit, even if he can't pay us. We have a vendor mortgage, whatever. And we create the entity, puts in their group doesn't have to take the hit anymore. We're going to concentrate on our food and our food exports, on our distribution and so on. And then there's investment side of things. We can do the same thing. Now, we've already created that whole group and call it QWI. It has KIW, it has all that stuff in there. On our books, you ever see the value that they carry? Well, you don't have to guess because the NAV is there. You can tell what the book value of QWI to them is at any given moment, right? So if you just look at the end of the last quarter, or the end of the last year when they reported to us, it was no, that's actually not the year. If you look at the end of 2024, they're at $1.30 in terms of NAV. And so that puts them at a book value, overall book value of roughly 1.77 billion, call it 1.8 billion. As of today, it's at 1.13 billion. Oh, no, not 1.13 billion, sorry, 1.5 billion. But the share price is a multiple of that, right? Is a factor of that. The actual share price of QWI is 1.07 billion. So if somebody were to come along and there's one more point there you want to check and see what they actually, that's a net asset value, but what do they carry? They being Jamt, what does Jamt carry QWI on their books as? Like what value do they have QWI on their books actually at?
Because they have a lot of non-controlling interest. They do. So if you look at the so you're trying to say that essentially they could end up selling their portfolio at a price that, for example, to a buyer could make sense, where it's like a discount. So it's like a 10% discount, 15% discount.
Maybe even bigger.
And it's a huge amount of cash.
Yeah,
it would be.
And it could
and
be
the thing is, like with the spin-off, well, I don't know about that, but with the spin-off, so if it's
go ahead. No, go ahead.
No,
I want Thaon's point, though, you know.
No, because like when you're doing the maths, right? It's the net asset value. So you're measuring what's this portfolio actually worth. But there's a huge gap between that and the share price. So there is still profit to be made as an investor that actually owns QWI if somebody else is gonna buy it above share price but below NAV. So there's still that, like I was saying, you could still be buying or you could still be selling in profit.
I'm not talking about that. I'm not talking about like a shareholder, like a retail investor buying shares. I'm talking about from the perspective of Jamt selling their stake and then them trying to sell at a price that makes sense to like a buyer. Say it was like a MJE or whatever other company or whatever. Yeah, because then the funny part is, I would argue that I should sell or I would buy it at a discount and a decent discount because something like Access, that's a huge part of the portfolio. So I'm like, I'm taking off that value or something. So maybe you buy part of the portfolio.
No,
or you just discount it and say, okay.
No, man. If I'm buying QWI, I'm buying QWI. No, I'm buying QWI. I'm buying audits. It have a lot of things in there. Lots of interesting things. Access is also a nice one. Right? Access would be an interesting one considering who I say I think might be looking to buy it, but she's coming back home. But I'm coming from there's multiple perspectives in there, but I'm coming from the perspective of me, Jamt. I just don't want this thing on my books anymore. The fluctuation that it can give me erases the work of literally my entire team. I have all these employees who do all this work. I do all this stuff. I'm known for this. And a very small investment committee can make a misstep, or they cannot make a misstep. They don't have as much control.
Is irrational, Randy. You have to remember that. The Jamaican market is irrational.
Is what? Is irrational?
Is irrational. Is irrational if you listen to them. Like they will say, at the same
sarcasm is heavy.
Jamt episode that we're referencing. There was an article from, maybe I can pull it up. You remember Thaon, the IC Insider article?
Yes.
About, I'm a big fan of IC Insider also. I've been reading it for years.
Let me try to find the...
I get it piped into the group. automatically as it's published every day. Yeah.
I definitely, damn, I wonder if I can find the article though. There's one where he has, he talks about access. Oh, I found it. So let me share it. He talks about access versus dollar. I don't know if you've seen this article before. So this was from 2022. And essentially there was a quote from there that stood out that said, so this is re-access. He says, the writer of IC Insider, notably the stock price, and this is referring to Access Financial, should increase about 1,000% to more than $250 per share by 2026. What year are we in, guys?
Pause. What date is this article from?
July 15th, 2022 So 4 years later.
Time, though. That was COVID times. That was COVID times. It's a wild time. Oh wow! No, but come true. Let's hear it. But
so he was saying that. Yeah, so IC Insider is essentially saying that Access is a $250 stock by 2026, which is next year. So I guess I'm just thinking that.
Okay.
I'm just saying, if I was buying it, I would discount it. I mean, I have to double check the portfolio, but yeah, they have other good holdings. But I'm looking at something like this, and I'm like, with the Access stake and stuff,
you are buying Access stake also, so
yeah. So I'm saying, I would factor that into a discount, and I would say,
You said, let me hear what you're saying, and I tell you what I would say.
I'm saying, like, okay, you're looking at the NAV, and you're like, Thaon is like, yo, $13. First off, I'm not buying it at NAV. You have to give me at a discount. And especially if we're talking about a person who could end up buying this.
100% true.
He's definitely
buyer's market.
Yeah.
Buyer's market.
He's going to, so
bear in mind,
I look at this, and I would say, so I would say, maybe 95 cents, 90 cents.
95 cents.
Max $1. Between 90 cents to $1.
Why would you buy it at why would you buy it at 90 cents? Let's put it at the lower end of what you said. Why would you buy it at 90 cents?
I'm just saying, I would want, I guess, somewhat of a margin. Yeah, that's what I'm using as the basis, the NAV,
which is $1.13.
Okay. Yeah.
Yeah, as we speak.
Okay. That's what I was saying. Like, if I was looking at it now, I'd be like, if you really want to sell, because you have these projects you want to do, whatever, you're pressed, no one else is going to really buy it, maybe. Or maybe no one else would really buy all of it, and you just want to get rid of all of it one time. That's a price that I would maybe buy it.
You're not going to be able to sell it. There's no demand. And you have over a billion shares. You're not over a billion. You have hundreds of millions of shares. You have, last time the report, they had 374 million, almost 375 million shares. Nobody's buying that from you in one go. So you're going, a discount, I think, a must. Like, we're starting at discount. Is how much of a discount now, right?
Yeah, because at 95 cents, that's a 20% discount to the NAV.
Woo.
That's 18.9. Yeah, about 20%. Yeah, 18.9%.
Sound like something to me.
Sound like what?
I mean,
that sounds like that's a price
cash
to me.
they're getting. Yeah, it's cash they're getting in their hand.
Or maybe suppose they're not getting cash. Well, fine. Let's leave it at cash. Let's say they're getting cash. Yeah. What then? Bear in mind, it's trading at 79 cents right now. So the market is valuing that company at valuing your stake. You being Jamt is valuing your stake.
But the market is irrational.
Yeah. Okay. So we're talking. Let's say the conversation is amongst people who actually who have a different view. It don't matter what the market is saying. You know, buy for that, you can't sell it for anything else. Is anybody beating on your door to sell it to them? No. The market don't even want to sell it for what they know it's worth. They know for a fact that it's valued at least 30 odd, if not 40% higher, and they aren't buying it at that. So this is very much a buyer's market. Let's talk about how much of a discount you're giving me. So you said 90. I don't know if you have a different number.
Well, Preston, are you going with 90 or 95?
I gave a range. So I was saying
you're buying. You're the man at the table, so you can't range.
I'd start at 90 cents. That 90 cents is my price.
Straight 90. All right. Thaon?
It's trading right now basically at 80 cents. I feel like 90 cents is fair.
It's trading at 79 cents.
79,
okay.
That
one
buying
at a premium.
You know, that one cent, you are buying at a premium. If you got 90, you are buying at a premium, actually. That's an interesting point. So I probably want to go squeezed and go, why am I, if the market isn't valuing a thing at more than 79 cents, why am I going above 79 cents? I could make that argument. You need it sold. If I don't buy it, it's not going anywhere.
That's also true.
2, you are at, I don't know, there's the carrot and the stick. So the selling means the carrot, but there's also the stick. Access share price could keep dropping every quarter end. Can your books handle that? How many more losses can you take on your books? That's a threat. And I'm saying that as, remember how share prices work. You don't take a lot of shares.
True.
Somebody could sell. You don't even seem to be buying that much access shares all the time. So
exactly.
Suppose somebody's selling it heavily at the end of the quarter. Who it gonna hurt? You and Proven? Yeah, Proven no book. Does Proven book it the same way? Proven book that's an associate.
No,
but Proven don't book the value, right? So you have to book the value. What's happening? You kind of have to. I could squeeze it that way. But I like your 90 cents because it's a carrot and stick. Less than NAV. So I'm getting a bit of a discount, but it's greater than share price, so you don't feel too robbed.
There's something where I'm trying to remember where the quote came from about like when you're making a deal, it's like the best deal is one where it's like both people kind of come away saying, damn, I wish I kind of did get more or something.
Yes.
Yeah. And I even think about that with things like, I've thought about, we've Thaon and I have had a conversation. It was do you remember, I think it was maybe a year ago or something, like we were talking about how you could kind of set up a fund. And it's like you list the fund at NAV.
Oh, yeah.
And then there's some stuff I probably don't want to say, but there are certain ways that...
I won't pressure you, but there's great... That's part of the market, it's just...
No, we should say it, because this is all hypothetical.
I would say, like, you could... so you list the fund at NAV, and then you could maybe set up your do... Yeah, you could even do that. And then you could set up... Well, actually, maybe even don't want to do $1. Maybe you do a price. You do a quote-unquote bad price versus like $1. And then you issue shares.
after
you bring in an IPO. Yeah, so maybe your IPO. And then you could just, have it set up that the company's like buying back shares and whatever. And then eventually you could do something like maybe as Select Funds is trying to do, where they kind of delist the company, or even something like this where we're talking about QWI where you're selling, but it's like, there's more I'd want to go into, but I don't want to go into it on this step. But there are certain ways that people, like, I realize that it's like a lot of these IPOs, like I think there was even a comment on one of our videos recently, like saying, with how the IPO is priced and then all that stuff. And I was kind of realizing that, at the end of the day, bring that back to the same point about you set up a deal. And I think it was, Ryan actually, I think mentioned this on one of your episodes about like how was it like GK, when you used to work at GK, how they kind of price IPOs is like they leave something on the market, table. So it's like you set it where like, this is $1. This is the stock is $1, but I'm going to sell it at 80 cents. But if you realize a lot of the funds,
I don't know if that's what he meant when he said, but finish your point.
But it's almost like they're saying, when we think that it's going to list, we think the market is going to value it at $1, right? So we are going to maybe list it at like a 80 cents or in a way, so that there's almost like some, I guess, a little gain left there in a way. But then it's like you bring that to the funds. Most of these funds, I don't think any of these listed funds would sell below the NAV. They all tend to sell at the NAV. And I think that in a way is a big issue. Because
the NAV for them is being able to pay their light bill with the balance sheet value, right?
And it's like you go to an accountant and you're like, why must I sell this thing that is worth $1 at 80 cents? No, I'm not doing that. I'm selling it at $1.
And most accountants, well, I can't say most accountants, but many accountants are gonna encourage you to, your book value is your book value, selling below that. That's what they learn in school. That's what they're going in. That's like the base for everybody. It's like an investor conversation is a bit different from that sort of thing. But the difference from that sort of thing is where we are, which is that if Thaon was the person running QWI and owning those QWI shares, and you, Matthew, were the person buying it, nobody's really beating down Thaon's door to buy those QWI shares, and the QWI existence is a hit to the rest of his group. He kind of has to take what you're taking seriously, or you have to deal with more of a hit, right?
Yeah.
And I also have roads I don't want to go down. I mentioned the carrot and the stick earlier. People negotiations use the carrot and the stick, and there is a big stick you can wield against that, right? If you have enough money in the market, you can wield a hell of a stick. That point they made it from Ryan, I think about that point from Ryan all the time. Listing, how I think of it, how I interpreted what he was saying was that If you're looking on a company listing and you think it's worth, when you do your analysis, you think it's fairly valued at $1.20, $1.50, let's say $1.30. You might IPO it at $1. Right? So why? Because I'm leaving something there for the market to be excited about. I'm leaving something there for the market to push towards, which I personally don't believe that has been done by any IPO in the last, I don't know, maybe 5 years.
2 years?
No, I'd go further than that. I'd go
5,
much further than that.
Dollar. Yeah. So not even Dollar.
Dollar might be the last one that was priced with a bit.
Or RPL? RPL?
I don't know that. No, RPL I don't think was. Let me. I don't want to say it's wrong. Let's look. Yeah.
I'd say RPL.
I mean, GK
Dollar
has done a great job. GK has done a great job. Bring on my RPL. I see. I have 2 notices tagged in there, right? Insider mid blackout sale number 1 and insider mid blackout sale number 2. I haven't heard anything about that. It's a reminder to myself. We can come back to that. But RPL, I don't know. If you think, just not the be all and all, but let's say PE, if you think on a PE ratio basis, when they were IPOing, their PE was, I don't know that it was.
I guess I wasn't thinking from the PE basis. I'm just thinking, wait, I think when they listed, it was like, was it 1 gas station they had? And then they were going to open up 2. So it's like, to me, I'm like, yo, they could double the revenues. And that's just that. And they had already started it.
True, but then I go to PE because you have to come back down to profit, especially if you go into the gas station business. IPL it's not to say that there haven't been good IPOs in terms of how they've been structured. And of course, there's also the other perspective of what does a good IPO mean to who? Right? To the RPL guys, from the company's perspective, once we get the money, that's what we wanted, which is part of the justification for IPOs.
Look, we were talking about IPCL, Apex recently. Apex is at, I think, $1. Because it was funny because Thaon and I were I think it was on our stocks to watch for Q1 this year. At the time, Apex was maybe like $1.20, $1.30, and I was looking at it. It wasn't like I haven't bought or anything yet, but I was like, they're kind of going through some tough times. Like maybe I wouldn't buy it at $1.20, $1.30, but maybe at $1. And then I'm seeing it at $1 now, and I'm just like, but maybe it could have dropped some more, maybe 80 cents.
True. But as you guys learn more about funds and your own funds, you'll look, just make sure you review these decisions, because I know what you mean, and they're at $1 now. So I agree with you. Hey, they should have IPO'd at $1. All right, they should have IPO'd. They don't want it to be. And then
Williams too.
No, Ari Williams, in my view, should have IPO'd.
They said $2 billion. They said they want to be worth $2 billion.
You'll get there. Why you rush? Well, this will happen when you rush. They're gonna go there. In my view, I think Ari Williams, it's a very careful thing, because you see, when I say $1, it's not just $1. It's about any company can list at $1. It's about how you structure the whole thing to what the dollar is
shares
worth. So I think if we're working with that dollar as a point of valuation with what we understand, I think Ari Williams would probably be closer to 40 cents in terms of where it should have maybe IPO'd. And as you see, it's not been able to sustain it in terms of profits. It hasn't been able to sustain that sort of pricing, which is why it's falling. The market's the market. But hey, from their perspective, they got what they wanted. They were worth $2.5 billion for 2 seconds between the time the prospectus came out and the market opened on day 1, right?
Yeah.
And then dropping time. But I haven't thought that there has been any really good, well-priced IPO in maybe 5 years. And I'm saying that because of how they are put together, how they are, the voices that have won in the prep have been the brokers who hold a lot of the handle, and the company owners who want the prestige and the money. So like you mentioned, Ari Williams, I don't know the team behind it. I know it's a young team behind it, and I'm happy to see them. And I think they want the 2.5, not just for the money.
Pharmacists.
Yeah, man, we want that valuation. Why not? Yeah, I'm happy to see that they've listed it. So I want everybody to come to the market. Just come to the market. The market will find, the market is, in my view, very rational. The Jamaican market is very rational, and it values things. The market cannot be wrong on its valuation. Valuation can be wrong. It just is what it is. And the market will carry you to your true value very, very quickly. I think if Image Plus falls for very long below $1, it will not stay there. Me personally, looking at it right now at $1, I would buy it at $1, and I would be prepared to buy it if it's below $1. But it have competing priorities. Because of the latest IPO, the quiet one that everybody kind of was weird. Atlantic, yeah, man. Yeah, man. Lovely IPO in my view. Lovely IPO. I think a little bit of trickery happened there too. I'm not sure what happened with
It's a trickery. I mean,
maybe another episode I'll talk about that. But
I'm sure Lumbo is hopefully happy.
Huh? Lumbo, yeah, I hope so.
Lumbo.
Yeah,
no, Lumbo. I'm saying Lumbo.
Oh, Lumbo. Oh, short
yeah,
Lumbo. Lumbo, I think is happy when the prospectus came out. I bought a lot more Lumbo, and I bought a lot more GNAC when the prospectus came out also. Multiple brokers.
So you think they booked the share? Well, how much does?
I'd have to guess.
Advanced growth again?
Shows what the advanced growth people.
It's under 16%.
They own about 11%, if memory serves me.
Oh, also they book share price then.
Yeah. They do book share price and it IPO. It had a market offer that opened and closed at $1. So you can book that. I think I have it written down somewhere in my notes. Like they have a clear, I want to say something like 250 million or 150 million profit for Q1. That's already clear just from the ownership of that, and they haven't reported that quarter. This earnings season that's coming is going to be an interesting one. Yes, GNAC owns that 250. I think having head is the value that they had at IPO, and they would have bought it for much lower. So it's 100 odd million, I believe, in profits that's going to be reported on general accidents books in this quarter. So, and GNAC being what they are.
How does that do? I'm trying to remember how much profit they make normally.
That's a significant profit for them. For GNAC, 150 million
last year was 540 mil.
Yeah, look on the quarterly.
Oh yeah.
On a quarterly basis. Yeah. I mean, Q1 last year was 55 million.
Yeah, that's alone double profits.
But that's just a part. The business still exists, still doing what it does.
That alone, yeah.
Yeah, more than double profit. I think it's 150 mil. Or
oh, 150. Okay.
Don't want me to do those numbers. I don't want to go through the math of it. No, but between 100 and 150 million in profit just from the listing, from the prospectus already sealed up, and now it's actually listed, and it has fallen wonderfully.
It actually said I was planning to do I had like a buy order set. Like I was hoping that we would see like the first, I think it was like the first 3 days or so I had a bucket set. Sadly it didn't. It's funny enough because what price did I buy it? I was trying to buy it at, I'm trying to remember. I think it's actually at a lower price now, so it's worked out for me. Because like
it's at 86 cents currently.
But like you can get that in the queue though. Oh yes, you can. Wow.
Of course you can. Of course you can.
Okay. Wow.
I mean, check the allocation. What was the allocation?
Allocation
was half a mil at 86 cents. Okay.
The allocation wasn't that great when it first came out. I'm trying to remember.
But you got all the units, bro.
Yeah, it's now everybody
got all the units you need.
I guess that's great. Yeah, that is true.
Yeah.
You did get all the
units. I love the allocation. I didn't apply in the IPO. Actually, it's the first time in a long time I regret not applying. But it had
look at this.
Because I'd be down.
Oversubscribed. A lot of the first 100,000 shares applied for first 100,000 shares. And then 64.48% of the balance of the amount applied for.
Bear in mind that IPOs is usually hear the notice saying first 10,000 shares.
Yeah.
And then whatever, 6% after that. This is 10 times that as the base. And then anything above that is 60 odd percent. I think maybe 4 or 5 people applied for that IPO.
And they didn't have to, because when you meds, they were under, but at the same time, it was only 100 mil for the general public that they left?
It would appear that there was only 100. It would appear like there was only 100 mil supposedly for the public. But who knows what JMB would have chosen to do as a broker and what the company would have instructed their brokers to do, blah, blah, blah. What I do know is that I like the price it's at now. And it would be hard for me to not buy, it would be hard for me to buy IPCL shares instead of buying this.
Yeah.
I like it.
On the IPCL point, there was a episode, the episode we did with Top Striker Shan, the stocks to watch for 2025. There was a point where Thaon made this comment about Elite. Like he was like, Elite, man. Like, I was saying that Elite one day could turn around and then people would actually really like it. And then you had said it was I should ask you about that specific point of the episode. It was a good while back, so I don't know if you remember.
Oh, yes.
Yeah.
Yes.
Let's see if I made a note to myself.
I'll probably find it in the
I remember
chat.
Randy did say that, yeah. Because it's crazy, because off air, we we compare the two stocks, of course, because they're in the same industry, very similar companies, Elite and IPCL, or Apex, as people know it as. But to see the stocks do like 180s, it's just interesting, or the potential of doing 180s, especially with Elite, because Elite's been getting flack for years. The stock price has not been at its high for a very long time. It's high of what was it like trading at $5, $6 before?
Yeah.
What, Elite?
I found the points.
Yeah,
Elite. I saw it. I checked in to see if I had any notes for it, because I wish we're not at a point where you could just play it and I could just hear it and then I'd remember what it was. So let me see. Let me see if I made a note.
Because Elite right now is trading at $1.46.
Well, actually, yeah. I have a theory of why you were mentioning it, but I want to see if I guess I end up if I'm right.
Well, I'll tell you what it is once I remember. So you can tell me what your theory is, but I also want to pay attention to your theory. Give me 1 second. Give me 1 second. Did I send it to you with a timestamp? I tend to do that.
Yes, you did.
Yes, you did.
Okay.
The link that you have there has the timestamp, so you could just watch it. Yeah. Because my theory was like, I think that if I remember correctly, it was like a point where I was like saying, "Yo, Elite, man, it could turn around."
That's exactly it. I listened to it. No, that's exactly what you're saying.
I think because I was looking at Elite, and like if you look at the chart, right?
You should play it. If you click, can you do that? If you click,
I could
the
put
link,
it in after. I could edit
or
it
if you
in
click
after.
the link now and share your screen and share the audio, we'll hear it because it's timestamped.
It
goes right.
Yeah, technically, I could share the audio. Hold on.
Yeah.
Share my screen.
Elite, man. Elite. I remember this. This is a fun episode.
Yeah, big up.
Top striker Shan.
Yeah, big up Shan. Big up the top striker.
Okay, so sharing my audio.
I mean, you guys heard it? I'm not sure if I remember. Let me hear what you remember, Preston. If it's not jogging my memory.
So what I thought was that, like, if you look at the chart, so like, early in 2024, it's like $1.50, whatever. And I think let me put in the report dates, when it started moving up to the $2, whatever. The Q4 I think was good. Yeah, Q4 was the one that was good, 28 mil profit. The Q3 before, it was 2 consecutive reports of profit. So it's like, okay, people are like, oh, yo, they're actually possibly turning around. And I was looking at that as sometimes, like, I guess even to our point that I think we were talking about before, where like you have to be that person selling into the demand. It's like someone could have been in this, bought at the $1.50, and then could have been selling at like $2 plus, which is how much percent?
$1.50 to $2. You can,
it's like at least 30% or something.
I think
at least like 30% or so.
Yeah.
So I thought that was more your point in terms of like looking at things like that, like trying to possibly like be earlier and being the person that's selling into that demand. I don't know.
I don't want to tell you yes or no because I honestly don't remember. I'm going to have to like listen to it to remember the whole context of what I was saying. But that point, which is linked to the point that we're making, which got us on this whole trail, is a real point where there's like a responsibility on a fund manager to do that. And we all are fund managers. We're managing our own portfolios as funds. That's what we are doing. So you have to do that sometimes. You have to be able to that's a part of what aggressive fund management probably looks like, which brings us back to the old QWI point, or what I'd like to see and why I'd like to see. And I'd cap that point too, just to say that point around QWI, to say that the reason why I think Mayberry will bite is because if you do, for the ones who go deeper, check like wargaming, what actually happens if Mayberry buys QWI. They're definitely buying it. If they're buying it, they're definitely buying it at a discount to NAV. Even if they buy it at the current share price, right? Let's say they buy it at 78 cents, 79 cents.
79 cents, yeah.
Look at the 79 cents. They would be buying it. Like, what happens if they buy it at that price? Yeah. Literally just that. Like, what happens if they buy it at that price? Wargame what that actually looks like for MJE, for all the players involved.
Yeah.
MJE, like, how do they report that on their books? Because what is QWI?
Shareholder value.
Shareholder value mean everything. What color you paint the wall? Shareholder value. You know? but think about it. They'd be buying, going back to that point that you made earlier, Stan, about how we have it, the NAV versus the share price. We have right now, it's 43% above the share price, right? And of course, you can flip it because the NAV is 113 and the share price is 79 cents. So there is actually roughly 30% discount if you were to take QWI stake. A roughly 30% discount is what you'd be getting. So you'd be buying, what is it, 11% of access? Whatever, you'd be buying a chunk of access at a 30% discount. Like in the IFRS, in the IAS, if you read the financial rules, there's a way that investment companies books that gets to be booked. Immediate, that's a straight thing. Like, how does MJE, I talk about a grow, understanding the M of a company, understanding the money. What happens if they buy that much of a company at a 30% discount? They book NAV, but they also compare it to what they pay. So if you're paying, that's an immediate profit gain on everything, right? And if you buy this thing to take it over, if you take this thing over, you're now buying a fund. You're already running a fund. So this is just going in. There's nothing new for you here, right? In some of these things, you're already in. You're just consolidating your stake certain ways.
I mean, in terms of like your fees, like it's not like, your expenses are going to go up drastically.
No, yeah.
You don't have staff costs as the same staff. Just
what staff?
Bake it into
Of
MJE,
that's a hell of a thing if you can buy it. And if you're thinking from the perspective of MJE, not many things can move the needle for MJE, right? So something like this, being able to buy something like this is maybe a massive thing. No, the question is, would they buy the whole of it? Would they buy all of it?
Are they cashing out? So is the question.
I mean, they just collected 3.8 billion. This thing right now, the entire company is worth 1 billion. They could, but also we're in a market where there are all sorts of options now, and this is controversial. Mayberry has never done it, and I respect that. And I'm not a fan of it. But in fact, forget an APO, but payment could be rendered in many ways. Suppose they buy, like what happened with CPJ AS Bryden. Suppose it's paid for in shares, right? Suppose MJE pays for QWI in shares and does a true takeover and say, we're also delisting it, like we're going full takeover. So I'm not doing just takeover to go over the 50 and it's mine and blah blah blah, which I could. And there's a lot to be said if it's a second fund that we own and control, but it's not us. The ability for something to not be us is very interesting. But let's say that they were to decide, so the simpler route, they decide to.
Yeah, they get a lot of flack for that.
For what?
Depending on what price they offer, because like most of the public could end up, I guess, be selling at like a loss, and then
get a lot of flack. Okay, well, who would get a lot of flack? QWI?
No.
MJE?
Yeah, if they're the ones buying.
Well,
I don't see them getting flack.
Depending on the price they get it at. So say the price they offer is, I don't know, 90 cents. And then the NAV says $1 plus. I'm just thinking that, hey, a lot of people really want to sell, but then it's like, if you don't sell, then you're gonna be stuck with this liquid thing. So it's like, that's what I'm thinking about flack.
True.
So unless they give a price, but then remember the higher the price they go up to, then it's like the less of a discount it is, or less of it makes less sense for them. So it's like for them to make sense, they get a really good price. So there's kind of that balance I'm thinking of.
All right, well, hear me out. For the last year, at the point that we're looking at it, for the last year, QWI's price has averaged about 76 cents. It's currently at 79 cents, right? They offer 80 cents. Nobody with a large enough stake in QWI would have been able to sell any appreciable amount of units at 80 cents, really, or above 80 cents at any appreciable way. Moreover, carrot and stick. No, you're not. What you bought when you bought QWI was you bought a piece of a fund. When I said like the AHPs, the AS Bryden CPJ thing, suppose I'm not paying in cash, so it's not costing me cash at all. Suppose I'm paying in MJE shares.
I don't know how beneficial that is to QWI owners though, because I feel like they would want cash, but at the same time,
well, sell back the MJE shares.
Yeah, also true.
Yeah, sell MJE shares. And MJE has a history of dividends, which QWI does too, but not in the same way.
Not in the same way.
MJE dividends are tax-free. QWI dividends are post-tax, but like the franked income, we got the dividends, so we passed on to you. There's already dividends, cash. There's already the girl guys know what I'm talking about. But the point is, MJE don't have that word. MJE is in St. Lucia. Dividends is just boom. What you get is what you get. No tax.
Mm-hmm.
Why would it not be great? And would it move the needle for MJE? Would it move the needle for MJE to purchase QWI at like I have a whole theory, like I can map this out properly. Like would it move the needle for them to buy QWI in total at 1 billion, knowing that it has assets that are worth I've forgotten the number that we said earlier, but
1.77, I believe.
So much,
wasn't it?
I mean, it was a NAV a year ago. The highest NAV has been is like 132, 133 thereabouts. And we know it's been dragged down heavily by the US stuff and all of that. But so I'm buying, 177 was what we had said, and it's about that 1.77. So I'm buying it at $1 billion, and I'm getting a 700 million uplift in price. I think that kind of moves the needle for MJE, not by much, but it moves the needle. I think it turns into, I don't have free analysis, but if you examine the market that way, there is room for that argument to be made. I hate to say without going into better details, but there's room for that argument to be made. And there is certain bits of profit. I think it's no secret if you check it. MJE has had a need to report some profits, and I think they have some stuff set up. They're under pressure. SVL is under pressure. Why not take an easier, quick win? And I think it helps with a lot of the stuff that they have coming because of the stakes that are there. QWI does have some interesting stakes across the market, especially the junior market. There's strong stakes in SOS. The access stake is obviously a very interesting one.
GK, Cement.
Exactly. Places where MJE already exists and holds the big stake. Remember, you're reporting your NAV. That NAV can shift. I can take a hit in NAV, can you? How long can you take a hit in the NAV? Can you outlast me? Yeah, I have less people to report to than you. Right? It's a very interesting thing, and the more I look at it, the more I thought
it's not like QWI is your stocks to watch for this year.
I don't do the stocks to watching, but I do when I watch it in my portfolio because like I said, I bought more and I continue to buy. And it's interesting to me, if you go back to that point that we're making around the shareholders, it's interesting to me who else has been buying quarter over quarter over quarter. Just 3 consistent sets of purchases of. If you go back just the last 3 quarters, I'll wrap it on that. I'll wrap that point on that. If you go at the last
this year
3
might be
quarters,
the year of funds. This might be the year of
go
funds.
back, if you go back to the March quarter from 2024, you have Amalgamated Distributors, which is I believe a related party of Jamt buying, Claudine Murphy buying, MJE buying, and Jamaica Tea's buying account buying more, right? You go to the June quarter, next quarter, you have Keron Sanja Ale Smith, MJE, and Jamt buying. After that, Keron Smith, Claudine Murphy, MJE, Jamt. The quarter after that, which is the last quarter reported with these numbers to us, Keron, MJE, Jamt, right? Who's Keron Sanja Ale Smith? Anybody ever check out? Anybody know?
No, but doing some checks right now.
Yeah, that's the kind of the dot sort of thing that I preach heavily. Might be interesting. Could be like an accountant. Maybe it's an accountant. Maybe it's an accountant who knows something. I mean, there's not that many accountants. There's not that many accountants buying stocks locally. We know that, right?
Yeah, that's true.
So if it's an accountant, that could be interesting. But that's just one person. We know who MJ is, we know who Jamt is. But think about that. If it's an accountant and it's an accountant that's related to any, in fact, forget Keron then. But do your own research. I don't know who the person is either, but do your own research. But MJE, Jamt. Why is MJE buying more?
Yeah, exactly.
Millions of units each. And last quarter report that they bought 1.5 million more. So they've been slowly accumulating more and more and more. And Jamt has been buying more QWI, even though, as you saw, a year ago is when it started. A year back from today is when it started. Why did it suddenly start? Not when it was cheaper too. Just a year ago. What about a year ago would...
I think the buyback, was it June they got
this is Jamt, this isn't QWI.
True.
Yeah, that's the sort of thing. Wonderfully interesting things. It could be nothing. But I look at it, and the more I look at it, the more I'm realizing that, hey, if MJE were to take this thing over, it would work so well. And there's also, again, the carrot and the stick. if you are a holdout QWI QWI shareholder, but I'm not sell. The threat of listing is gonna be delisted would push you to. It's not like you just lick something there.
Yeah, so I don't know why this thing closed, but where did it go? Is an accountant for real, Baker?
Or there's an accountant with that name. That's interesting. If you look at MJE and you look at what the booking would be if they were to buy a fund below NAV, I wonder, do they get to book the difference between the share price and NAV as profit? If they control the fund and sell themselves, the assets of the fund at whatever price they choose, how much better is that?
That's also true.
Yeah. Do you get to book the value of the fund's assets, delist the fund, but the fund still exists, it's just not listed, and then that fund sells you those assets at whatever price you also privately decide, you get to book the profit twice?
Yeah.
Do you? The more I look at it, the more I'm like, yo, there's so much here. No, again, it might just all be in my head. Or it might just be me going back to that thing, the Ronaldo Messi thing. I'm going, yo, Messi's magical. It could, Messi could do this, that. I don't know. It could be nothing, but I bought more QWI and I'll probably buy more.
But even if some of those stuff don't come true, I think the fact that when I look at like the difference in the NAV and then them actually getting approval to do the buyback, and it's trading below that point, that's like an arbitrage point for me. And the percentage gain that you make on that alone is enough. Easy. So I didn't buy because of what you're saying. I just bought because of that.
And those are strong points on their own. And if you bring like the dividend yield into it, that's another great thing. I mean, QWI has a strong dividend yield. And if you think about it, you get a better dividend from Access if you own QWI shares. Because Access pays the dividend, it's taxed, it goes to QWI, then QWI pays dividend. But I'm buying, if they pay on that dividend to me, I'm buying it at a discount. So I'm getting a better yield. Yeah, if you look at the last few years, 2024, the dividend yield for QWI was 3%, 3.16%, 3.2%. 2022, it was 4.43%. QWI quietly has some of the better dividends in the market. And like I said,
wonder if they had like put that towards a buyback.
If you go, I don't wonder if you go through their financials, they have a frank income thing because they're Jamaican. I'm not an accountant. I don't know accounts. The accountants can correct me. But I believe like when their companies in their fund in their portfolio pay out a dividend, obviously there's tax on that from if there's taxes, right? You can't get double taxed on that when they pay a dividend. So they have a franked income reserve. Yeah, the grads will know that when I did advanced grower, we touched on that for a little bit. But they have a franked income reserve where pretty much the dividends go into that. And when they're paying out dividends from that, it's there's no tax on it because the government has already collected that tax. It's seen as we're just giving this dividend that is from our portfolio, which was already taxed to our shareholders. So there's no second tax on it. I said that to say you can check that account. You can see what it is. You can see when they transfer to it. And so I don't think that would necessarily be used for a
buyback.
But also that's a number on a screen. Money is fungible. So while it's not like that money is sitting in an account, it can't touch. So yes, I could do a buyback. Now, will they actually be doing a buyback?
Been almost a year since I got the approval. So
but I could see a meeting in which Matthew, you're Jamt and I'm QWI, and I'm saying, hey, we're going to do a buyback, and you're like, well, why the hell am I going to spend 100 million cash? Right? Because remember, if we do the buyback on that, that's money that you, Jamt, could have maybe used for something else. So, move the factory. Look how much the hell will go through the factory. Look at all these things that will go through. Why the hell am I going to take 100 million and buy back shares in this company? For what? Like, who's it benefiting? We're hugging up a loss on the books anyway. And when we're not hugging up a loss, we're hugging up the threat of impending losses. Like, why am I going through this? When I also have to go through the pressure of thinking about the manufacturing side of things, the distribution side of things. Yeah. Like, to me, there's just so many strong points to be made for spin it truly. It's already spun. Sell it. Sell it and concentrate on what you want, right? If you want some investment income same way, maybe you take payment in MJE shares. No, again, at that point would speak to MJE dilution, right? But possibly there are ways you could do it without dilution, or even if there is a dilution there,
it's justified.
It could be justified, depending on how you do it. So depending on how you do it, it could be justified. And in fund companies, it might be. It's a very interesting, different thing in fund companies because it's so very clear what you're getting.
Yeah.
Yeah. If I'm giving you X amount of shares that have a dollar value, that have a value of $1, and in exchange, you're giving me near cash assets. I'm getting NCB shares from you that have a value of $1.50, but you're giving me it at $1 because I'm paying in shares. The very visible near cash nature of it, I think, might be interesting. The dilution always is one step away from the full APO effect. But in this case, I don't know that there would be as much of the APO effect because there's no public. You're not bringing in the public. I'm giving a specific amount to Jamt in order to get their QWI stake and then trigger my buyout offer to other QWI shareholders where, again, it's a straight up offer for you to get. Like, I don't want to lay out the whole plan, I say, but there is a plan, right? And of course, there is a possibility of dilution, but then you can just buy QWI shares. Because if you buy QWI shares, then there isn't as much. You're not going to be diluted. Or you can buy QWI shares to the level where you don't have to face that level of dilution, or you can come out or whatever. Fund managers have all these decisions that they can make, and I think, at least on the Mayberry side, I think the decision might be a bit simpler because there's less people to ask. Bottom line is, you've heard a lot of why I've been quietly buying some QWI shares. It's a hope, though. It could be wrong, it could be nothing. But worst case, I get some nice dividends. Get some nice 4% dividends. Yeah. So that's my investment case for that, and my thoughts on Ronaldo and Messi. But yeah, it's a hell of a third to go down. I don't remember how we got down there, but I'm happy that
I have no idea. And the thing is, like, I don't know, we're talking about funds. We touched on a lot of other stocks too, which is something I also want to talk about because there's still a lot going on in the market. People would say, oh gosh, the market dead, because a lot of stocks have been trading, people have been saying the market dead for years, by the way.
Man. No, you see, that's a joke. I've always been, the market is down. Is the market down?
The market is
always
down.
Great. Market is great.
And there's always so much drama going on in the market too. Even the other day I saw I think you also, did you comment on it? I don't know if you commented on it publicly still, or we had a discussion about even like the Dolphin Cove stuff, because that was a clear opportunity for profit. One, also, I just like to see that kind of stuff behind the scenes in terms of like the drama with the business and their parent company. I mean, most people should know. If people don't really know, the parent company. I think we did. Did we do an episode on this, Preston? I feel like we did. No? Okay. Well, the parent company, World of Dolphins, they announced bankruptcy. I think maybe 2 months ago. I could be wrong. I think it was in February. I don't know. Somebody can correct me if I'm wrong.
I did comment on it. You say the Dolphin Cove thing has gone into drama. I did publicly speak about. I showed a video of the parent company CEO speaking to his group's bankruptcy status because they had applied for bankruptcy.
Yes. They applied for bankruptcy because they had like 200 million liability. It was a bunch of stuff. Still have
200 million US in liabilities. Correct. Yeah. And the share price did fall when it came. That's like mid-late February. Which, I always say shout out to David. Yeah, I saw him on Kalila. And Kalila had a segment on Dolphin Cove.
David, so give us the update. What's going on?
The main intermediate holding company being declared in bankruptcy for about $200 million US worth of liabilities. The market has taken some level of concern so far. The stock itself halted down and hit a new 52-week low of 15. The volume traded today is the highest it's been in over a year. It's quite the development. So, Dolphin Cove price tumbled down today. They fell a 324-page document, and this is public, by the way. What I saw in the document was quite concerning.
What's like the worst case scenario here?
So, one of the worst case scenario angles is that the shares that the parent company owns in Dolphin Cove are sold on the open market. When you add more shares to the market supply, you're likely going to see a depressed price or a reduced price. The other negative which is another extreme, is that the creditors decide to do something called asset stripping. Let us say they sell the Dolphin Cove resort itself or the property by, let's say, Ochures, for example, or, potentially find other ways to sell assets in the business. If the $200 million worth of debt that is being referred to is only related to the holding company, that's a serious problem. If it's referring $200 million worth of debt across the group of companies, it's bad, not so bad. If it's just $200 million worth of liabilities only to the parent company or intermediate holding company, it's a major problem because that's a lot more difficult to address. And there's just a lot of uncertainty with all of these developments.
So what should investors do now?
For me, I would just try and find information where I can and assess accordingly. You're in a space where you don't know what's happening, and that's a very big problem. So right now, I would just watch and see what information is coming out, because you just cannot make a truly informed decision. So for me right now, I'm not trading the shares, I'm just observing. While, fear is a time for you to be greedy and, in this case, buy more shares. If the shares that the parent company owns are sold to the market, then the potential loss as the price goes down with more supply in the market.
But the whole thing, as she usually does, business news. And it was very, I don't know how you'd see, I can't get out of myself to see how I see it. So she had, I think a lot of people were shocked what was happening. There was, I think, a big fair response in the market.
There was.
Yeah, the share price fell like something like what, 40 or 30 or 40%?
Yeah, it was close to 40%, I believe.
In a matter of like days.
Yeah. And people are messaging me too. People are like, yo, Thaon, what do you think about this? Yo, Thaon. I always get people messaging me, asking me what I think.
Yeah,
I'm just like, well, it's not going to stop for you. And when you think about it, you're just like, well, there's a lot of uncertainty in the parent company, but how does that affect Dolphin Cove? And I feel like people realize that, which is why the stock, I don't know if that's why the stock rebounded, but the stock did rebound right after. And there's even a lot of uncertainty with the chairman too, because they said, did they say they fired him?
So that's why when you said that, commented, I was wary because I didn't comment because of the latter stuff that I've seen happening, which is true mix up, as we say.
Bare mix up.
I don't know what's happening there. Man is fired. Man not fired.
He's not fired.
Fired from last year.
Them say my buy back the company.
Yeah, like I kind of say, but if you saw how that was said to the parent company is going through trouble. But I've spoken to my bankers, and if you're willing to sell it, I'm willing to buy it back. You're down now, but we're up here, I'm good for my piece. Yeah. And then there's also
the Jamaican company is doing nice.
It is the jewel in the Dolphin Cove crown, one of the jewels in the Dolphin Cove crown, the Dolphin Group's crown, which is the thing. How I'd put it is this: I'd look at the share price drop first versus the I look at the share price drop first versus the subsequent director stuff. The director stuff is happening now. Even I don't know what's happening there fully. I have my ideas on that. But the share price drop around the bankruptcy thing, I love that. Right? I hadn't bought Dolphin Cove in a long time. I did. As smiling when you say, it went back up. I know I contributed somewhat to it maybe not falling as far as I would have hoped, because I started buying. I got it and started buying. And just to give an idea of what that looked like, looking at the dates here on my screen, between February 17th, Dolphin Cove was at 19.59 cents, which is around the regular region it has been. That's in its range, 19.20. And then the news came out that day, and the very next day, over the next few days, it fell as low as between February 17th and the end of February 28th. You're looking on a little to no time, a few days.
Just a few days.
Yeah, just a few days. You had it falling, I want to say the actual percentage, because the percentage was a surprise to me. For how much it fell was a big surprise to me. It was a real blessing, if you will. It fell 34%, yeah. And then by the middle of March, so 2 weeks later, by the 14th of March, it was back up to It was back up to 1998. I call that a Godspeed dip, right? It's a wonderful dip. Sorry.
Yeah.
I bought pretty heavily during that time. I was very thankful. And it's for the reason that you said, Thaon. Being very simple with, I like to simplify things. I put it this way. I think I put it this way at the same speech I gave, but I don't have to put it this way at Grow and at Advanced Grow. It's like if you one of my parents has surgery. They're sick and they have surgery. And you're worried they're in a bad state. They're sick. And obviously that's not a happy thing for me. I'm not in a good place, but I'm not the one that has surgery. It's them. I'm not the one that's in a bad place. It's them. And it's terrible, but it's them. So if God forbid, but let's say if something were to happen to one of my parents and they were sick and they're in the hospital, the bank shouldn't raise the rate that they let me buy a car at because my mother has diabetes, right? My mother has diabetes, not me. And so if the other players in the market, other shareholders look at it, they're like, oh my God, if they got caught up in the frenzy and the noise of this Mexican company is going through bankruptcy. Dolphin Cove's parent is going through bankruptcy.
That's the thing. Some people maybe misread it.
Not some people.
Heard
obviously, a lot
that
of
Dolphin
people.
Cove was going bankrupt.
All they heard was Dolphin Cove
bankruptcy. Yeah.
Sell. And I thought, oh my God, I was not expecting this blessing. Wow. I had not gotten the chance to buy Dolphin Cove for $12, $13, $14 in years.
Yeah, because the thing is, it just kept falling. And I was shocked. I was just like, well, when is it going to stop falling?
I don't know.
I really didn't expect it either. I didn't expect this level of, because even when you, I think that's the problem that I have sometimes. I think a bit too rationally. I don't take into account the entire market and how they would always think too. So it's just like you know, even points Preston was saying, like even if they're bankrupt, that could be well for Dolphin Cove because Dolphin Cove pays great dividends. If they need cash,
one of the best dividend payers on the market quietly.
Yeah, man.
Exactly. Yeah, man.
Do you think they're gonna pay a dividend? Cause I noticed, I think their Q1 dividend they would have normally paid it by now.
Yeah, I think whatever is happening, obviously at the board level, has been causing issues with that. But
and the reports, I think they delayed the audit because I think the audit was delayed initially, but the funny part. And it got even more delayed because it was initially, it was just the initial parent company. Then they're saying, no, it's the bigger parent company. It's like, I guess with your analogy, it's like almost like saying the parent is an issue. But then I think it was saying the grandparent is also having issues too.
Is that what they said?
Isn't that what? I think so.
No, man.
Yeah, well,
what got
it
in the second notice.
Well, the second notice was Wednesday, April 16th. Today is the 21st of April. And it's saying, there must be further delayed pending
intermediate and ultimate parent.
Yeah. Ultimate parent companies and any significant. Yeah. So it's because of the status of the insolvency proceedings involving them. So, yeah.
Because you are part of a group that is going through insolvency proceedings, or it would appear that you are. And not just that, but Dolphin Cove, I think, forms part of the collateral for a lot of that debt, or for some of that debt. So Dolphin Cove ownerships. I can see why the auditors may want to...
Because I think I'm gonna have to comment on it.
Yeah, there has to be some amount of I can see the auditors asking for a statement. In the advanced score group with the subscriber group, we've had conversations on it and I've gone into deeper depth as to what I think that why it could be done. But for purposes of this, let's just say I can understand the auditors asking for it. No, with the auditors asking for it, I would say that, how would I put this? You see, because there's so much drama around it, and I don't like that. But just sticking to the share price, I saw it as a blessing, and I wasn't confused by the noise. You have to learn to ignore it, go find between that. So like you said, you think sometimes, Thaon, you're too rational. That's where the grow up principles come in, where you stop and look at the view. What's the view of the other investors in the market? How are they viewing? When I watched that episode with Kalila and David was on it, and David was like how it was very fear inducing if you don't know better. And I was like, if I could have paid him to sound like that, I would have. I was so happy. I was so happy. 5 years so you think Dolphin Cove dead. I was so happy. Bro, I bought a lot. I spent more money. I think it's probably one of the things I spent the most money on buying in that time. And it over the next week or so, it rose 50-odd%.
Yeah, it rebounded
ended Q1
for sure.
up 55%. Did it? Oh, well, no, by March 14th, it was up 52%. No, that's a funny thing. That's why I don't necessarily watch those point-to-point measures or the market is down. Because you'd look on Dolphin Cove and you think it's down. You wouldn't think that somebody
has 50%
without going into numbers, but you can tell the amount of money that was spent in that time if you add it all together on the market. If you look in that time, right? Over about $1 million was spent every day during those 10 days. There's a 10-day trading period there. During that 10-day trading period between the end of February and March 15, a little over $1 million was spent every single day on average. So 10 point odd millions during that time. And that, if you do just a little bit of thinking and putting it all together, you realize means that some people made. It's not every day you get a chance to make even 15% on 1 million in 1 week.
Yeah.
Real. And I believe it's down again, no?
It is down again.
I think it was when the new news came out about the ultimate parent people are fearful, and I think also we mentioned at the dividend that they haven't paid their usual dividend, and then also you're expecting that the reports. I'm wondering how that Q4 will look.
I expect it to be. It's always a loss. I expect it to continue to be a loss. I
don't think the port is fixed, and then
it's a manufactured. I don't say it's a manufactured loss, but it's
Yeah.
I'll give one line that I've told that we've had in the Grow group because we've spoken about it now for 2 months. They have way in advance thoughts of my thinking to have those conversations already. I would not be surprised. I said at the time I wouldn't be surprised if it falls again, and it has fallen again, but not as much. It's not down to $12 yet. But
it's not too far.
Well,
if you look at the queue right now, the highest buy order is 13.
Correct.
1301.
You think people panic when they see the Q4 if it's an even bigger loss?
I think it's gonna be a loss. I've views around that. I've views around what the Q1 will look like. I'm hoping that it falls more. I'm hoping that it's terrible. I like the stories. I like some of the stories that I saw come out about it. Just because, honestly, I'm being plain here, just because of the fear-inducing nature of it. You're afraid that you sell something valuable for cheap, but I don't mind. I don't mind buying more because if you think it through, even just the bankruptcy, what does that mean?
Exactly.
Yeah, what does that mean?
What does that
Parent
truly
has applied
mean?
for bankruptcy. What does that mean? Yeah, Spirit applied for bankruptcy. JetBlue, I think, applied for bankruptcy. What does that mean?
Yeah.
I loved it. I loved the profit, and I'm hoping for more. I'll put it that way. And I will say for the results, I expect the Q4 results to be bad. I expect them to be a loss. I wouldn't be surprised if the Q1 results are a loss now too. The only thing in this that has given me true fear has been the comments in the whole mix-up with the board now, where they're talking about like leave it and the JSE should suspend trading.
Oh yeah. I think that's probably what scared some people.
Down. Yeah, slow down, hombre.
Yeah, how do we get here?
What are you talking about? But I think there's a chess game being played that maybe we are not all privy to. I'll put it that way. A chess game being played that we're not all privy to. Remember, again, the Dolphin Cove stake that is owned by the Dolphin Company, it would appear to me, is pledged. A good section of what's the term? Pledge, yes, but I want to use the right term. It's a good section of the collateral for some of the Dolphin Company debt. Yeah. And you do how and what you do with your bonds and all of that matters. But hey, my own perspective is that, listen, that's what I even want to say. It's just, hey, you think white people are not coming to Jamaica anymore to swim with the dolphins and buy those $20 waters because somebody in Mexico is going through bankruptcy?
Exactly.
Yeah.
Dolphin Cove is Preston made a good point because they have a property that they're trying to sell. It's how much was it worth, Preston? About 800? I can't remember. It was a lot of money. It was
a lot. Yeah, let's see if it's a lot.
Yeah, it's a lot of money. And if your parent company is really that strapped for cash, and you have a property that you could sell, like, you're gonna probably try and sell that property. There are other ways to make money, from what I understand. Like, okay, yes, bankruptcy. I need to actually see what that really and truly means. It's just like are they just running out of cash? right? Is it something even more insidious?
I think what was said in one of the articles, they had to do with the timing. So it's not like, they can't find the money. It's like the money is due now, but it's like, they needed some time more. That was my understanding of one of the articles.
Yeah.
I even think like the Dolphin Cove story, that whole thing taught me something. Like, you realize that if you are an investor, I think the first article that came out wasn't in English, and it wasn't even in Jamaica. You realize that if you are someone who are like, you are researching and stuff, and you translated that, use up your AI or whatever stuff, you could be that person, and you could have known, say, yo, when this reaches the Jamaican market, the stock is going to tank. And then that's why something like, I guess, shorting, but I guess in our case, because shorting isn't here yet, you would have to say, okay, when this starts to ding, people are going to possibly be fearful and stuff. And then
you could sell other things in advance. Had to sell things very quickly the day before and the day of. Yeah.
Are you afraid of that sometimes? Like you're selling that thing, and then you could be like, for example, some of the stuff you're selling, were you taking a loss on them?
I was making some of them I would have been at a loss. Some of the things I was choosing to put this over there now.
This is better. Like, this is a 5% loss. This is a 30% gain or something.
And there's fun. The fun thing is a whole other conversation. So I had to be making some decisions there, but no shorting. I'm not gonna kill off myself over there being no shorting. We've not really had it at wide access. So if you have enough money, you talk to your broker, they'll put something together for you. I was just happy. I look at the situation for what it is. The reality of the situation is what you have to deal with. And the reality of the situation was that I saw the opportunity, but that taking stock was the cherry on top for me, boy. Couldn't have planned that better myself. I look like that's direct profit that I made from that. So shout out to taking stock. And shout out to the sharp investors who know how to take the news, because it is shocking news, and step back and go, yo, okay, what does that actually mean? What's that actually? That's, you guys are always big on the next steps. Oh my God, this is the world. The world has always been ending, and it will always be ending. All right. But what's going to happen tomorrow? And that's where the profit was to be made. That's still where the profit is to be made. So I'm not as worried. I wasn't worried about that. I expect more bad news from Dolphin Cove, as I said. I don't like this board fight thing either. But hey, board fight that's what boards are for. They're not there to look pretty to all us. The boards are there to represent stakeholders.
Truly.
Fight between stakeholders. Hey, the Mexicans own 79.99. They can kick anybody they want off them board. They seem to not know how. Because even the last notice about it, I saw, was like, it was done this way, and I thought, I don't know if one of the companies that's how it's done. But also, you have so many shares, just call it EGM and kick. But I shout out to Tyrone.
Shout out to
the rights issue.
Shout out to Tyrone. Yeah, Mr. Perpetual rights issue. I see talking about rights issue now too. That's another topic. Yeah, the Dolphin Cove thing, it will always come back down to this. Sharp investors know how to interpret the news and predict the reaction to the news. That has not changed, and that will not change. And shout out to the investors who are able to do that. Yeah. The market becomes a lot less scary when that happens, but it also becomes a lot more scary because you become the man or the woman in the arena. You are the one making that bank. You're making that bet. Yeah. Because I'm making a bet now that Dolphin Cove, like, I truly think it's going to go down. That's me saying that. I'm truly thinking that, I'm going to lose some money, and I'm going to then spend more money after I've lost money in that. I'm going to throw good money after bad. Hopefully that's not what I'm doing. But it works.
So you're hedging in a way?
I was hedging with the dip, the second dip I was waiting on. So my hedge in this case, poor man's hedging, you get to sell a little bit when it's higher, because you just make 50% on how much millions. So take a little bit out. Because I expect it to fall again. I expect it to continue to fall. I expect bad news. I didn't expect this board fight. I found it weird, that whole thing about the chairman, but then I seen more cascas come out about it now. A lot of my decisions were made on what I expect the Mexican side of things to be and what I expect to be done. And the beauty of it is, as long as Dolphin Cove remains in business, remains operations going good, it is the jewel in the crown. What's the worst that could happen? That the Mexicans lose it? I don't know any Mexicans. It's the reality of it. as an investor, you have to think about the reality of how the investor will go and what your stake in it is and what your place in it is. And it's a meme, but sudden emotions lack logic. Sell, right? That's you can't have the sudden moves because you'll miss opportunities when that happens. And you can't depend on how other people feel about the thing to unless you are sure that those people are sharp or good or spotting something. Like when you guys point out little things, that mean more to me than when somebody just points out that, blah, blah, blah. Shout out to Danai. This is one of the early things I realized with Danai. Why we ever had a podcast or ever have any conversations at all was that a lot of the words in the investment space sound the same but mean different things. Just think of that $1 conversation earlier. If I'm talking to you guys or I'm talking to Danai and I say, it's when I say it's priced wrong, people think I mean $1 versus $2 versus $3. No, you can have 10 companies with $1 IPOs and 5 of them are priced wrong. It's not the $1 that's important; it's the overall valuation, what you're getting for the dollar. But then I don't get to explain that to everybody, and I don't try to. If I'm having a conversation with you guys, I'm sure feel that pressure now too. If you're talking and you're talking in a way that you both understand, the public don't always get the nuance behind it. Moreover, sometimes people add their own meaning to what you say. Yeah,
no, very true, and misquote you.
Yeah, of course. Or sometimes quote you. But that's not what that means. That's not what that means. Yeah. So what I try to do is just to come back to the reality with it. I don't have to worry about as much about talking about it publicly. In the growth groups, I'm explaining all of what I'm thinking and what I'm thinking and my whys, and that obviously is great. And so that but the pieces fall where they may. And I invest in, I just going for it. And I'm seeing more of the value now of what the things I said jokingly. I don't care what anybody says about the market. Very few people's opinion on the market do I value.
Yeah.
And because even the people in the market have their own things. Which company going to an APO until you say, no, the share price might stagnate for 4 or 5 years? None. This is the best thing ever. Give us your money. Right? And then when the share price stagnating, I go, I don't know, the market is irrational. Right? In the same way, you have to know then, I have to rely on something sensible. I have to rely on what I know. I have to rely on what I see. I have to rely on what's clear to me and trust my own gut. Yeah. So, when Tyrone doing rights issue, I'll have to review the terms and trust my own gut. I don't know. You guys buying the Kintire IPO? Not the IPO, sorry, the Kintire rights issue?
Rights issue?
I'll have to reach the prospectus.
Let's
the circular.
Fancy what? The circular.
Circular. Yeah.
The circular. Yeah.
What I like is that he canceled the last rights issue and immediately did a thing again for a new one, right? After after 2-3 years.
But they didn't mention anything about hold on, I should probably check the notice because if they wanted to do it, wouldn't they just call? I don't think they called a board meeting, right? They didn't give you information on that. So I'm like, why are they?
No, they said that they did. They called them a board meeting and said that they're going to consider one at the next sitting.
Oh, they did. Maybe I need to check the.
I could be wrong. So you should check.
Yeah, let me. I'm just like, if they wanted to do it, then you do it.
Yeah, Kintire is. I can tell you currently my most. I don't know if it's the most interesting, but in terms of interesting, doing cool things on the market, things that I'm looking at, things that I want to see, interesting things. It's a very small circle, but
they actually did.
In it. Yeah, man.
They actually did say a board meeting. Wow.
Yeah. Following it
April 23rd. That is Wednesday. 2 days.
Yeah, and then they'll report it on April 23rd, the outcome of that meeting, and they'll also probably have a nice 7-day gap in there. They'll put out, when are the results due? 7 days after that? April 30th? A nice 7-day gap. They'll announce it. And then they have the get paid thing. Panjam JP, the Berry Group, the GK stuff, the Epley stuff. It's like the 4, and the Cygnus guys out there in there. The Cygnus guys kind of try to do some interesting things. So those 5 sets of people are probably the 5 most interesting sets of people to me on the market. They do the interesting things.
Yeah.
For those who are doing the research, and this is homework, I'd say look on Kintire and look on Panjam JP and tell me what outside of spelling and the people involved, what's the difference? They're doing the same things. Well, they're attempting the same things. Some are doing it, some are not. They're attempting the same thing. But
Wow, real. I just got all of that a while ago. That's crazy.
Same things. It's just, again, some are doing it. Obviously, with Pancham, you guys had that wonderful interview with
Jeffrey Hall.
From I don't know what to call. Where is he? JP Pancham? What do I call him?
Well, I have no idea. The Panjam Group.
Yeah, I think it's Panjam Group. He's
is he the chairman?
Chairman?
Is he the chairman?
I don't want to get it wrong. I'll go check. I think he's chairman.
I know there was a merger, but
Mm-hmm.
that is, I could go for days on that whole thing and what it might, in my view, imply for the next 20, 30 years. It's a merger together. I can't even talk. I can't even say what I want to say. It's a merger. It's a hell of a merger. I say that. It's a hell of a merger. And repositioning of the whole thing.
Yeah.
Repositioning of the entire group. Like, you haven't lost anything really. JP's there. JP assets are still there. Under the Panjam Group, JP's now one of the biggest and best investment core, just straight up investment vehicles on the market, right? It's just an investment vehicle now.
But share price.
Oh yeah, real.
Yeah. He doesn't have to care about share price. He's selling.
True. He's a prince of business.
Yeah. He's not selling. And the things he does sell, I don't know.
We don't really. Yeah.
When he said, it was more a Buffett style thing, right? So like, he'll sell something, he'll sell it entirely.
Mm-hmm.
Yeah.
Have you heard anything about the junior market limits increase?
Yeah, I've been tracking it fully. I hear the minister even announced it. I hear the minister announced it as done.
But no clarification
I haven't seen any paperwork. I haven't seen it in the guys. I haven't seen it gazetted. I don't see anything changed. I haven't seen the law change. Maybe it has changed and I just haven't seen it. But I'm happy to hear that it has gotten to that point, the 750, but I don't think it has actually gotten to the 750.
You think it'll be new listings alone? Because the wording seems to change at times, and I really hope it's not just new.
Say that it was only for new companies, but when it came up a couple of months ago in the girl group, I said, hey guys, want to remember there's a politician, they can say anything. My thing already, go to the primary sources. If that's true, let me see your let me see it. When I see it in law, when I see it in gazetted law, then I'll know what it is. I don't know. I can't say I don't know how they could make it only new companies. I know how they could, but why?
Yeah. How does that benefit the entire market?
Yeah. Well, why make it only new companies? What's the point?
Yeah, I really hope they don't do that. Like, I hope a broker can say, yo, oh man, don't do that. Come on.
Only one person would say that.
Yeah. What did that person say? They want $1 billion, right?
Yeah.
And they said that 2 years ago.
Yep.
What do you guys think about the micro market?
Oh, I think it would be interesting. I think it could help. I mean, there's pros and cons to it. It could help like formalize some businesses, and then people aren't realizing that you could get some, you like a lot of money into some of this, but the kind of gains that you could get some very high percentage gains, which I think could be good for like our developing, I guess, retail investors. You could be making some very high percentages because the allocations, you could imagine getting 100, imagine getting 1,000 shares and it's $1. Like in an allocation, you apply for 50K and you get 1K shares or something like that. And then they price it right, as we were saying. Like, people will realize that if the right company lists and stuff, it could make some serious gains. It could also go the other way. It could make some serious gains.
It's micro, right? So I mean, it's micro. It's, we think even on the current junior market, micro. So I don't think that it's going to be. Yeah, I agree that there's opportunity for serious gains. For me, it was more, I want it to happen. I want it to happen. I'm surprised I don't hear more about it in the space, and the stuff I've heard from the space about it was negative.
Yeah, I heard a lot of negative stuff about it too.
I don't understand why.
I asked the same question and I couldn't really get like a straightforward, because even if you think of it as like, penny stocks or so on, so you can still make hella gains on stuff like that, and it would formalize a lot. So I don't know. I don't know why there was so much negative press around it, but I thought it was a good initiative. I mean, maybe this is how the junior market got flack when it first started, and look at it now.
Yes, yes,
so,
a lot. Yes,
I can.
And for years after it started, too. Yeah.
Wow. Yes, I mean, I like it. It's just more ways for Jamaicans to invest in Jamaican businesses, and I'm for that. So, yeah.
Yeah, and I think it will be I don't know if this is known, but it should be a wonderful boost and boon to private equity if it's actually done. That's what it is. I can see a world in which
the exit.
Yeah, man. I can see a world in which you are doing some private equity investments, and I hate the term private equity now because it alienates people who think that they can't do private equity or don't even know that they're private equity. Like private equity is just investing in somebody that's not listed, in a company that's not listed or whatever. I can see a world in which Matt, you doing med school sort of company. And Thaon come in with 10 million and I come in with 10 million. And you have another 80 million worth of equity in there or whatever. So it's 100 million that you're valuing the thing at, and you run the thing for 3-4 years. Maybe you pay out like one small dividend. Maybe you can't have the dividends. You run it for the next 3-4 years to the point where you get to the point where it's good enough. Maybe for 2-3 years is good enough to get to the micro market, and then you go to the micro market for 40 million, right? And so 40 million. So now you value the company at 140 mil. Or well, maybe not 140 million. If you go to the micro market for 40 million and you have to give up, let's say let's keep you having to give up 20%. I could see them doing that. That values the company at 200 million, right? And you take maybe 10, maybe 5 out of that 40 went to me, and 5 out of the 40 goes to Thaon, right? So you have 13 cash to play with to run your operations, and you do that for another 2, 3, 4, 5 years. Let's say you find out 3 years, and if it works out, or 3 to 5, and it works out to the point where you're good enough now to hit the junior, and so now you move up to the junior, right? So it's tight shareholdings, not necessarily a lot of trading per se, but if we want to trade, we can. We are no longer stuck. You see, in that first 2 years, we were stuck. Meaning, unless I can find somebody who genuinely believes in you, your vision, and wants to continue and be an investor in your company, I can't sell. Right? But then the second it went micro market, it became out to the public. So now I was able to sell to more than just you. Now the second it became public, it's a publicly listed entity, even though it's on the micro market. So it's a higher level of asset valuation, and it's a level 1 valuation thing. It has a public market price you can value it against, which means I can borrow against it better. So I'm still supporting you, but I can take a little loan against it and paint the house or whatever, right? But I'm still supporting you, and you have to run the company we run it anyway. So you have to run it, but now you are within a structure that by the time you go to the junior market in year 5 or year 8, it's just an upgrade for you because you're already doing your reporting on time. You already have to worry about public market pressure. You already have to have your audited numbers. You're already running at a higher level of quality. And you're now maybe IPOing with a valuation of you probably coming to the market at a valuation of 2 billion. So we, the early guys who took that early risk, 10x, we got a little bit of that value out and a little bit of that risk eased up when we got to the micro market. But then we went to the junior market, and so we have the real big win. We're 10x.
Yeah.
Just the valuation alone. Remember, it was worth 200 million when we went to the market, the micro market. But now, if we go again at the 2 billion valuation, you can take 400 million. You can take 400 million for the 20%. And yes, we would be diluted along each step of that thing, but what we're getting in return for the dilution is so much greater than, of course, which is natural, normal for any private equity. But it would encourage and establish greater private equity at lower levels from a completely different set of people. You and me could have extreme private equity impact with 1 million Jamaican, 500,000 Jamaican.
Yeah.
It just as long as the thing you're investing in, the person investing in, the business you're investing in is willing to go through the stringent requirements of and the work of building a business, which is hell on its own. Then get into the micro, then get into the junior. Yeah, I would be 100%. I am 100% for it. I was sad to see that it wasn't accepted that way. It wasn't. I thought they'd be championing it. I thought they'd be like, yes, this is what we needed. Because it's private equity immediately. And then that's without even the addition of putting tax breaks on it. Now, if you put a little tax break on it, oh God, it's even better.
Yeah, because I was going to ask about that. Like, did they state anything about tax breaks because I don't recall seeing that. And
But
that would just be beautiful.
Well, what they said was, there's a very political announcement. It was an announcement to form a working committee. They are for the micro market, and it's an announcement to form a working committee for the micro market. It sounds
dividend
a lot
policy committee.
Yeah. But hey, to those guys, they did pay dividends after that, so the committee did some work, right? Right. So who knows? And for these politicians, I mean, we know we're officially in election season now. So yeah, it's a very heavy thing. And I did comment on that publicly, and I did send a public tweet to both financial reps of both parties, because at the end of the day, you have to take it serious. It's our country, our market. The market is our thing, and that's a direct thing for us. So I wanted, I don't care about any politician more. I care about my family and my friends and myself. You are here to serve us. So the best thing we should do is to try and get both of them to promise to do the thing that we want. So whoever win, we win. Right? that's why I wanted was his name, the opposition speaker on finance, Julian Robinson, I think that's senator, to also have that in his presentation. I gather he didn't. And then I hear that whole presentation wasn't done seriously. That's what came out. That's what was said afterwards. It's a whole other political point that I won't even touch. That's kind of insulting. Regardless, when it comes to the real election time, that's another thing I encourage everybody, go and read the manifesto, see what is actually promised. And I'm sure they'll mention something about the markets. If we have it our way, both parties will promise us that they'll establish the micro market within 1 year of winning. That's what I would love, because then you can pressure whoever wins. Yeah, that's the chess game there. I just wanted to hear some views on the micro market and some positive views on the micro market.
No, I don't know, man. Like, I don't know how people could make it such a negative thing. I still don't know the reasons why, because I was even asking, like, yo, what's so, bad about it? And they're like, oh, Lily down the JSE thing. I was just like, well, the JSE has strict laws. So if anything, it would just encourage, business owners and so on to follow better practices. So I didn't really understand it, but I'm glad.
JSE doesn't have any laws. JSE have rules. The laws are the laws. No, but I'm saying that to say the laws are the laws. Being listed doesn't being listed puts more pressure on you, but it doesn't allow you to like, it's not watering on anything. It's actually more pressure. It's good. It's better.
This was saying could like help formalize some businesses.
Yeah, man. And imagine company. I can tell you, the stress of being listed is stressful, as you've seen in many junior market companies. Again, shout out to Tyrone and Kintire, right? And he's not the only one. Being listed is itself a very stressful thing, and you have to shift to understand now. Oh wow, this is what it means to be a listed company. And I'm not just talking about share price, talking about like running the company a certain way. Yeah, man, that shareholder pressure, all of that thing. But what could be bad about getting companies to act like that earlier?
Exactly.
Yeah. And again, that's even without the tax break. Yeah, the tax break can just be a little sweetener. And I would like a tax break on it. What kind of tax break would you guys want?
Well, I wouldn't want a junior market level tax break, because I think that's the real sweetener. Like, that's something for them to look forward to. So I don't want something like an incentive, but nothing like, no tax. Maybe how would you do this? Because I wouldn't want it. Would you want it to last 10 years? Because the thinking would be, for me, I want you to grow quickly enough to get to junior market level in maybe the first 5 years. So maybe 6 years or so. So 3 years you'd get maybe.
Sorry, I'm saying no, but you should tell, it's your dream, so tell me.
Oh, okay, yeah. I'm just thinking about it right away, right on the spot. So maybe the first, or it could be 5 years. So it could be 2.5 years, you get half tax break, and then the other 2.5 years you pay like 75%.
Are you giving them half tax?
Yeah, for the first two. It has to be short. It has to be very short, because you have to want it, and you have to see that impact on your company and be like, yo, I need to get this junior market level. Like, it has to sweeten the junior market tax break for you to want to get to that level. You have to incentivize the companies to get to that level. So maybe half might be a bit much, but for the first maybe 2.5 years, you do half, and then the next 2.5, it's 75% that you that you pay of the tax. So, yeah,
Mm.
that's how I can see it for now.
Matthew, what kind of discount would you want to get him?
That's a good question. 50% may be too much. So maybe, let me see. Maybe they do it like the junior market. So 10 years of a tax break. The first 5 is maybe you pay 25%, and then the next 5 is like 12.5. Maybe that. Yeah.
Wait, hold on, you pay 25% as in what corporate income tax actually is, and then the next you pay half of what?
Yeah, half of that.
Oh, so no tax break for the first 5 and then half for the next 5?
Hold on, what? So now let me see. So junior market now you don't pay any, and then for the next 5 years you pay half,
which is 12.5% corporate income tax.
Depending on the company, yeah.
Depending. Oh,
so maybe I should just talk in the so if I should probably work out the percentages. So if 12, so we pay 50. Should I need to do this math?
No, you don't.
No, just say like, what would it be? Like, whatever your tax level is, what kind of break are you giving them and for how long?
So you're paying, let me do this. So in your head, I was saying is you'd pay 25. Yeah, so you pay 25%. So you get a 25% cut for the first 5, and you get a 12.5% for the next 5.
25% cut, and then how much for the next 5?
12.5. So you half that.
Oh, okay.
So it's like it's the same concept of like half in it.
Okay.
Yeah, that's what I mean.
I get you. Yeah, I like that. I wouldn't go 10 years. Encouraging them to stay on that for 10 years.
Facts.
Yeah, I think I ramp up to the junior market. So I would say 5 years max is the most I give him. And I'd say maybe for the first 2.5, how would I do this? For the first 2.5, for the first 3 years, 25% tax break. I'm thinking incentives. Just like you said, I think of it live. I'm refining it live. Here's what I want to say. I'm thinking of the tax in terms of outcomes. The tax is to push you in a certain way. So initially I thought maybe just 3 years, 3 to 5 years. Most businesses fail within their first 3 years, right? So if you can make it to year 5, it's probably good. So I'd say maybe we have a 5-year break. I'm not bringing them up to the junior market level. I mean, the first 5 is 0 theirs. I would go, and it's 25%. I'm maxing whatever you can get on this market at 25%. All right. I would say 25%. In fact, no, 2 levels. Simplify it. 25% discount. 25% discount on your tax. On your taxes.
Okay.
For your time on the micro market. I didn't have to do added sweetener. That's it. 25% discount on it, because I'm trying to push you towards the junior. Now, if you don't take the 25%, no, you get the 25% discount on your taxes for 5 years. If you want more, move to the junior, right? And if you move to the junior, that allows you to have a second event, which means that then you'd have to have that would require some changing of the laws around the junior, but it'd still be good. So it's a micro market. So you have 5 years on it. You get a 25% break on your current taxes for the 5 years that you listed, with the understanding that you can go to 0 taxes if you list in 5 years or less. The quicker you go, the better it is for you, right? And also, bear in mind, the junior is optional. You don't have to go there. If you want to go straight main, you can too. That's it. That's what I do. And I cap the amount you can raise at maybe 250 mil. And I pick that number arbitrarily.
As in, this is for the micro market?
Yeah.
250 sounds high still. But
in terms of what you have to give up 20%
companies raising
now.
that. Oh,
you have to give up,
because I'm saying you have junior market companies listening for 250 mil. So I don't want it much, because right now it's what, 50 to.
I think there was an amount they said. I think there was a number like. Well, I mean, at the end of the day, they can say it, and then we can see what this actually ends up. But there was a proposed amount. I think I have it here.
I would say that you have to list at least 20% of your company, and so you bring it down. Let's say 100.
Oh, see there.
It's a 10 to 50 mil.
Yeah, I would cap it at 50 too. Because anything more than that, that's junior market level.
The amount that you could raise, well, that was discussed. They said 10 to 50 mil.
Participating equity. Okay, I like that. That's good. That's good. 50. Okay, so 50. So it's about the numbers that I kind of did for the example. So the most you could raise, wait, go back up.
It's 50 mil.
Is that what that says? I meet the needs of MSMEs in the 10 to 50 participating equity capital.
God, isn't the minimum to raise on a junior 50 mil?
It is.
Yeah.
So I guess they're going, just under that then.
Yeah. Oh, this is the raising, participating equity capital bracket. What does that mean? Does that mean the full valuation of the company?
No, I doubt it. That would be too...
That would be kind of...
Too small. Yeah.
Nothing is too small. Anything can list.
True.
It's easier... Like people talk about it that way, but the requirement to list on the main is actually easier than the requirement to list on the junior. A company that's valued at 10 million Jamaican can list on the main market.
Oh yeah, true.
Yeah, can IPO on the main market. Is in our minds that we put this sort of different prestige on it to make it out of reach. It shouldn't be out of reach. It's supposed to be easy. All right. So let's say that's participating. I think you have the wording of the law too, so it might be that. Yeah, that would be a 250 million valuation of the company if you're giving up 20%. That makes sense to me. So you value the company at 250, but you've given up 20% in order to get 50. What kind of company could qualify for 250? You're thinking of PE ratio basis valuation at 250, PE at 17. It's a company that's making like 17.5. PE at 20, which they like to mention these days as if it's popular. That's a company that's making 12.5 million in net profit a year.
12.5 mil net profit a year.
Let's see if I have the numbers.
You know what's funny? I'm just remembering.
What's
do you
that?
remember the I think the initial thing we were saying for this episode, we were supposed to do our stocks to watch for this quarter.
Wow. Well, I guess we kind of did that in reverse. We kind of did it in reverse.
Yeah.
So
I was just trying to think if there was one, because I don't feel like I have contributed one. So I was trying to think of a stock that I'm watching, because we're recording April now. So that'd be April, May, June. And it's basically end of April, actually. So it's only really 2 months. Trying to think. Do you have one in mind for you, Thaon? While I think.
No, I usually... Let me just click the market button on my money JA and just look through the market.
Just look through, yeah.
Yeah, pick something.
I do the same thing all the time, actually, when I think about it, or I do it grow.
Oh, actually, I know one. So I was looking at it maybe a week or so ago. You made that Cygnus, their year end. Their year ends June, right?
June 30th, yeah.
June. And I was mentioning that, hey, when I checked it the last time, I think the last time they bought back shares, it's been like a while, like several months. And I think
like 12.
The buyback is so much.
Probably.
It's a good while. So I'm like, that could actually be an interesting one, because if they, if they say, hey, we haven't really been buying back shares, we've been making profits. And I think they've been posting like some decent profits and stuff too. I'm wondering if they could end up...
Well, the last quarter, the profit was kind of rough, but compared to the year before, but lots of reasons given for that. Lots of reasons. I would not... That's not a knock on them at all. Yeah, Cygnus... I mean, I like the company. I like how they've laid out, but the share price, my views on that already. Why you like versus what you invest into to make money from. But continue on that point, because I'm in agreement with you about their
I'm just thinking that if they end up repurchasing shares again at the price, like if you look at this kind of price that they purchase shares at, I think they buy shares. Even I was mentioning on the US side, is funny, because the US... Cygnus US is actually, I think right now it's actually a bigger discount than the JMD.
Oftentimes, yeah.
So, well, I guess technically that's a lot of the US stocks.
Not
like it's
always,
a USD dominated?
not always. In fact, some of them are very. I said the market is very efficient. Trans Jamaica is one I look at a lot.
Yeah.
Oh yes, Transjam was actually an interesting one. I think the US side has dropped less than
sometimes
after the offer for sale. No, I'm saying after the offer for sale.
Oh well.
I think the US side has dropped less, right?
I
Can check.
Bro. I got out. I know what's happening. Once the Prime Minister announced it in January, I was happy about it. Of course, I tweeted it out as he announced it, but I also put my sell order in immediately.
Yep.
It's very clear. But for me,
I actually traded that. I traded Transjam. It was pretty fun.
Oh, I like that. What kind of profit? Yeah. It was good profit you made, and I chose to
pretty good profit.
I'm sure Jerry and them have been making money off that trading. Because it also has such.
I remember selling when he mentioned it, and I was just like, all right, this is too large for me to feel comfortable being in it, because NROC owned 20% of the company. I was just like, if they're gonna make anybody buy this at a given price, it's gonna probably trade down there. So I exited there, but then I realized, it's not really, dipping like I thought it would dip. And then the offer for sale came out, and it started to dip a bit. And I'm like, all right, there must be a point where you can sell. Because we were playing, and I think we said it on the podcast too. There must be a point where they have some incentive in keeping up the stock price for maybe these brokers, these huge brokers. I think it was JMMB and NCB and so on. And I'm just like, they want this price above the offer price, right? How can they do it? And I looked at when was the last time they paid a dividend around this time, our Q1. So I'm just like, it's likely that they're going to pay a dividend. I'm pretty sure we said it on the pod, but either way, it's happened. And, the shares, one thing I didn't expect is for the dividend to be on the shares that you're applying for as well. I rated that. That was good. Fair play. But there
why
was
didn't you expect it?
I don't know. I don't know why I didn't expect it, because it would make after
in hindsight
it makes sense, because you don't really want people to sell, but the shares didn't reach the account yet, so you couldn't really sell. Was it that I'm just thinking about the tactics of it all. Was it that necessary? Probably not, but
I think it may have been necessary. So the people who bought an offer for sale got the dividend?
I believe so, yes.
Yeah, I think so.
They qualified for it?
Yeah, I believe that was the thing.
But then
that had me very sure.
I think I'd expect them to do that, because you're trying to attract people to buy the shares. So
I feel like but this came out way after the prospectus, no?
I don't know if it came out way after. It's hard for me because, again, you guys know how to grow a subscriber group is.
It was a few days.
These are conversations that we've had from January. We were expecting, we know the dividend is coming, expected, and the question was around how likely are they? So I've been on the side of expect them. I could argue both sides. I expect them to have the dividend be declared in such a way that if you buy, you qualify for the dividend, because you want, at the end of the day, is what does the driver want? NROC would be the driver in that case. The NROC doesn't want to sell those shares, right? So make it more attractive to people that, hey, we'll get the shares sold. I buy the shares and I can get a dividend also. Ooh, that's nice. Or the other argument I could make, and based on the facts thrown at me at certain times, I had both opinions. I remember, I want to say is Phil, but I don't remember exactly who it was that had this point, which was the government wants as much money as they can get. Why not declare the dividend in such a way that, you're going to sell the shares anyway, but we are going to get the dividend because of where the record date is, right? Yeah. And we saw what happened in the end. In the end, it was that they put it out there. And I think that I was actually against that thinking. Not that it couldn't work. We've seen Barita play that game before to hold out the selling, but I wasn't against. I wasn't expecting them to do that. Them being a government to do that, because what's the yield on that? I mean, At the current prices. The yield at their price is great, but the yield at the current price is not necessarily that big, and they're getting the money anyway. Then when I saw them go back and have that thing arrangement, to me that said that a call was made. NCB said to them, listen, we can give you the money. No, the government just want the money. I don't really care. Government don't care after this. I'm out. So I just want the money. NCB go, well, all right, here, you can take a little bit of a discount. Let's say you take a little bit of a haircut, 2 or 3%. Because they use that 2 or 3% to pay for the
fees,
underwriting guarantee. The underwriting guarantee is what you use it to pay for, right? So your underwriting guarantee would cost you maybe 2.5%. Your dividend yield is probably about 3%. You can fill these numbers into the actual calculation. So give that up and you can get underwriting, so you're guaranteed the sale. Moreover, once you have the underwriting guarantee, we can privately, and nobody would know about this. I don't even know if this happened. This is just my assumption. We can just lend you the money. So government just want the money. We have this underwriting arrangement. Once you sign that underwriting arrangement, we'll give you a loan for the money, and we'll collect the loan out of the proceeds of the offer for sale. So as far as you, government, are concerned, sign this. And instead of getting 2.5 billion, you get 2.4. Or you get a small amount less, but you get it now. You don't have to worry about whether or not the offer for sale works. So all the risk is on us now, the broker, NCB, or the underwriter, NCB. And so once that happened, then I would also see, in my view, the driver has effectively shifted to NCB. And for NCB, it would be, well, why wouldn't we want the dividend? And if you check the little timelines of when these things actually happen, meaning the actual announcements, to me, it looks like conversation happened, a meeting happened, the decision was made, and then these things came out. So NCB, it would have suited the driver, NCB, who is on the hook for collecting, for underwriting all of those shares, that, hey, if we're going to underwrite that, at worst, we want that dividend. And so the date, I think, would have had those considerations around it. Bottom line is, it worked out well. I thought simply at first that do it so that the people get the dividend because you want it to be attractive to the people, and that's eventually what happened. And I didn't mind getting it. I think the lowest I sold for was 420.
Nice, yeah.
Days like this, you look back and you're like, I kind of know the stocks thing, and I'm happy to see it. When it's at, what is it at now? It's
66. Yeah,
veering down to that 360 point. Now, do I think it will fall under 360?
It closed one of the days at 361.
Yeah. Do I think it will close at 3? It actually closed the 10th of April at 353. Yeah, it actually closed on the 10th of April.
Well, that was a trade. There was like a huge trade. Well, two huge trades.
1.2 billion units on that day. This is going into the grow subscribers territory. Some of the stuff I'd explain, I don't want to go into explaining all of it now, but let's just say that for me, Trans Jamaica is a well-followed thing. We pay a lot of attention to it, and we make a lot of money off paying attention to it and understanding what's happening. It's not confusing to us, the stuff that's happening there. And it's a very predictable stock. And could it fall below 360 sustained? It could. And it could.
The dividend notice is until September.
Yeah, but here's a rule of thumb I'll share with you.
Owns it.
I have this little rule of thumb. If a company's stock has more than a billion units issued, it's not retail that's really setting or moving that price around.
Yeah, exactly. Yeah. So I was mentioning I would love to see the top 10 for the next report, just to see. Maybe we can kind of speculate as to who is in it. Based on the lead brokers, etc. But I'd still love to finalize who is in top 10. What does that look like now, right? Who has, what to gain based on share price and all of that kind of jazz.
Yeah, who bought that 1.2 billion? Who bought what was half of that value up top now? Who's the driver now?
Who is the driver?
Who's the driver
in
now?
the seat? Yeah.
Is Musson the driver? I think Musson may be the driver. Musson has sold hundreds of millions of worth over the past let's say the past year. Yeah, this is a very predictable stock in my view in terms of the things that have happened. You look in the 2024 year, who has been some of the heaviest sellers outside of the government. It's very, very clear. Musson started with a 2 million unit sale, and then the next quarter 121 million units, and then the quarter after that 29 million units, and then the quarter after that 20 million units. Of course, I don't knock them because again, they considering members of that group also sit on the board of this and would know. Again, we're guessing, they're not guessing, so they know what's coming. So it behooves them to get out. I don't have as much money anywhere near the class of money that they have, so I got out. But I don't know that their getting out was akin to mine. Mine was getting out and I can go back in whenever I want. They may have gotten out in order to get back in cheaper. So, because they know what's going on. No, there's no driver. Maybe they want to be the driver. No, I don't know. NCB wants to be the driver. I think NCB has other distractions. Hitting them at the time.
JMB as well.
Did you add up the shares that traded though?
When?
The big trade that happened, last week or 2 weeks ago? It's the 10th?
Yeah, April 10th, there was 1.2 billion shares traded on that day, which is a little less than half of what the NROC stake was. And I believe that I believe the people have their APO shares now, so the 2.5 has been redistributed, right? They have the APO. I call it an APO. Damn, they have their offer.
I see insider
shares.
call it an APO.
Even JMB, I think, call it even JMB call it an IPO, which I guess is better than call it an APO, but not accurate in terms of not calling it an offer for sale. But yeah, I'm wondering who bought it. It'll be interesting. The next set of updates for it to know how the ownership is going to be very, very, very interesting. At least to me, to see who
I actually thought
it.
most of them might be selling. I was wondering if NIF buying, National Insurance Fund. Maybe they were buying from Musson and maybe even JMB.
I don't see JMB really selling per se. My question was more on Mayberry side. Because to me, this is like a Mayberry stock, but
you think so?
I don't know if it's big.
Trans-Jamaica?
Great cap gains, pays regular dividends and so on.
You think they'd get in?
No. I think the only reason they didn't get in, well, I don't know why they didn't get in initially, but I think the only reason is they're not in the driver's seat. I know they thrive being in the driver's seat.
I mean, hey.
Yeah.
All right, would you throw a couple billion into something and not have a say? Real say?
Yeah.
I haven't seen them do that much elsewhere. And I mean, they're in Wigton, but as far as I'm concerned, Wigton is theirs, right?
Yeah,
they kind of run things there. I don't know that they would go in Trans-Jamaica. Yes, it has a nice little dividend yield to it, and it has a little continuity of income and some very predictable points of being able to extract cash from it. But you can't win every race, and you don't need to win every race. You just need to win the ones that you're in. So why enter a race like this? Because at the levels that they'd be entering, they're not selling, they're not buying $1 billion this week and selling it back at 1.2 or 1.5 next week. They can't do that. Somebody's already playing market maker in Trans-Jamaica, and you can go in and kind of squeeze the market maker for some profit, but I don't know how much, if you can squeeze them at the $1 billion level. So I I don't think of it as a Mayberry company. Me personally, anyway.
fair.
Do you have any stocks you're watching this quarter, Thaon?
I guess, but not necessarily. I mean, there are always stocks I'm watching, but maybe not necessarily for the reasons you're thinking of. Because even how we're talking about, like, MJE putting in money into certain companies and not having, being in a driver's seat. I think of something like even broilers right now. And what's going on with broilers and how that may even affect Mayberry.
What's going on with broilers? What's actually going on with broilers?
That's a very, very good question, because I'm seeing a lot of, Preston shared some interesting...
to go to the private briefing.
Crazy to me.
Yeah, when I heard that, I was like, what? Yeah,
do you know that the stock,
how that happened?
The stock, before those articles came out, the day, if you look on the trading in the stock, the day of the next day, the day the article came out, which would have explained that a private briefing happened that day. On that day when the article came out, I said a private briefing happened the day before. There was heavier trading in the stock at a much lower price.
So material information.
Of course. Look, I mean, you saw the article and you saw the fear being strewn around the article. I think JBG is managing what I think they know has to come. They must know there's a lot of headaches to come from how their stances, I can tell it. And I think they're managing it fairly well. I did not like that private briefing.
I was like, how is that legal?
It's not. It's not. You can actually face lawsuits for it in another market. Who is going to sue the leagues in Jamaica?
That's the thing, like, I guess with the activist.
It is further proof of how little retail is thought of.
Yeah.
Because
because I'm pretty sure the powers that be were in that private, meeting.
Yeah. I heard someone explain the reason. They were saying that, someone that was at the briefing, they were saying that it's because the kind of questions that people typically ask at the shareholder meetings, and then they're worried about them essentially asking those kind of silly questions in a way, and then how that perception could be. That was the reason the person gave.
You can't tell me that the paint is. You can't tell me the paint is silly. I don't give a damn what you think is my house. If I own even one share, is my company. You can think my questions are silly, and you might want to manage my questions, but the law has certain bounds within which it allows you to do that. You can't think just because. Have you ever seen those AGMs, especially a couple of years ago with Leachin, where people are at the AGM asking him about them 1991 bank book? He's pissed, but he's there. That's how it works. If I'm a shareholder, this is a shareholder meeting, you have to face shareholder questions. The law doesn't say an idiot can't be a shareholder. It says you have to treat all shareholders equally. That means including the idiots, including the fully done people like us. It's just how it works. So you can't, I saw it as well. And I know that I can tell that it's a stressful situation for a corporation to manage. If you understand some of the implications from it, there are more questions than answers. I actually don't know what has happened yet. We see 2 directors I think have left, or at least one has left. Obviously, I also understand it's a
the thing is, once I saw there was a notice. Once I saw the notice, and it said that when I saw the last name, I should pull up the notice.
As in Stephen Levy?
Yeah. Yes. And I was like, wait, he's family. So that's serious. Yeah. This is a notice that came out February 28th. It said Jamaica Broilers Group, resignation of a director. And it says Stephen Levy. And I'm like, wait, isn't he, what is he, the brother of the CEO or the president?
Yeah.
So I'm like, yo, if whatever it is, it's serious.
So for me, when I saw that last line, we pray God's blessings upon him and his family. I'm like, that's how Christians. That's how, I don't want to say that publicly. That's how certain things are said.
Yeah,
that's how certain things are said. I saw it, I was like, oh wow. Also, it's in family that said that.
Yeah.
So I was like,
he's been on the board, because when you look at it, he's been appointed to the board since 2013.
Since August, that's it. Been with the company since 2002.
Yeah, man. It's a family company. It's a family-run company, and there is obvious. It's obvious that whatever it is a very stressful thing, and I empathize with them for that. But you can't have disparate information going to some members of the public and not to others, right? You didn't call a press conference.
Someone, as you said, like someone could have been there and them say, yo, I go sell when they're at the briefing or whatever, depending on the time the briefing came out, and they would have had information ahead of someone else. And it's not even like the other person could have just read an article or done. There's literally nothing you could do unless you know someone.
Well,
so I guess it is a bit.
Well, it's not even a bit off. It's, how do I put it? I don't have to put it anyway. The article that I'm speaking of says, what was that? I don't know if this was it.
What's the title of the article? I can probably pull it up.
I don't think it's the one that I'm seeing here. Where this is about a private briefing. That's mentioned in more than one. It was
written by David.
Yes, but I don't think it's that very first one, right? What I want to point out here is the date of the article and the share movement on the share movement and the trading on that day.
Because it says Thursday. That was the article came out March 28th.
March 28th?
March 27th. This job. The article came out March 28th, and this is saying Thursday, like the private briefing to brokers and media on Thursday. March 28th was a Friday, so I guess it's really saying
yesterday.
The day before. Yeah. I don't know why it said Thursday or yesterday. Yeah. So that'd be the 27th.
And the 27th is when the report came out that they made that huge loss.
But the report came out. Well, the report did come out in the morning. Sorry. But I believe. What was it? What was the head of that article? What was the title of the article? Repair job.
Repair job. Yeah.
Okay. And that came out on the 28th, as you said. and that's a Friday. And they say that the private briefing happened on the Thursday. Now, look at the level of trading on the Thursday.
Yeah.
No, go ahead.
No, it was
it
increasing
closed
from
the
even the
Thursday
day before, though.
at 30.71. The day before that, it was 34. So it's like technically, if the briefing happened during the trading time, you could have sold it, some shares possibly at 30. I mean, you would have seen the report, but then you'd be like, wait, what exactly is going on? And the thing is, I don't think the report
Let's
really...
Let's clear that up also.
Oh, what time did it come out? Oh.
Yeah. Well, it did come out. It came out 8:28 a.m. So it came out pre-market.
Oh, okay.
I hope that's it. I hope that they covered their bases in that, because and JBG's like top level of the market. I don't know what the real definition of blue chip is, but they definitely fall into it, whatever it is, right?
The analysts love it.
Yeah. It's probably why it doesn't go anywhere in the share price. But yeah, it's a business you can understand heavily, and I think they must be so frustrated because of Jamaica's tariff situation has allowed them to prosper very heavily for decades.
Real.
And I don't think that the tariffs that we have are going to last. I don't think they can last. And so I was very happy about their US operations because of what to me it implies in terms of continuity of the company post tariffs falling, post the chicken tariffs in Jamaica falling, which I think is just a matter of time at least under the old WHO arrangements. It was only a matter of time, but hey, in this new Trumpian world, anything can happen now, right? But hey, look what's happening there. It's just really a speeding up of it. It kind of has to drop, I think. So the US operations, I think, were a good bit of continuity for the company there. And then to see that anything has happened there, but then I wonder what has happened. What exactly has happened?
That's the biggest question. Because why are you making this huge loss? And why is it from I think it was from the US company. I can't remember what the report said. I believe they said that
it is the US company that, if you look at the breakdown of the US side, and the implied problems with expense management, as they put it, is from the US side of things. So there's implication of some impropriety. But that's a crime in the US, and it's a US company. So I wonder how that's working.
We see another Dolphin Cove situation.
No, worse.
A lot of fair
situation.
This is
like
jail. Worse. Yeah, this is by far worse.
It's like federal, it's like jail.
Yeah.
Depending on what it is. I don't know what it is. So nobody has said what it is. We haven't seen what it is yet either. I mean, and the audited has to show it. But the audited isn't due until a little further down. Right? And then the question becomes, I don't think it happened now. How did it pass previous audits?
Yeah, that was another thing to me. Because our stuff going to be restated.
That's a major question. How did it pass previous audits? What exactly is it, whatever it is, and how did it pass previous audits? Major, like there's so much here, but I think also this to me is a good example of that Jamaican public's respect of well-established names, household names. The Leavys have for a long time done business also in a very openly Christian way. I remember being young and reading their annual report, the paper version, and see them talk about God in there, they end everything with the Jesus will help us, God will help us. So I think that they've built up a cachet of respect. That's why nobody really wants to press them.
Yeah,
and that's good that I kind of cachet.
I have a lot of respect for Chris Levy, because I've actually, when I was doing things with Moreland's a Christian camp, I was a counselor, and so I actually went to his house, and real stand-up guy, real family man. So I can see that that positive energy exuding from him into like every aspect, like business, all of that. So it does, it's really sad to see something like this. And we still have no idea what it is. That's the worst part.
But the implications that there's family, and that also I understand must be hard. Yeah. I mean, I have two brothers too, and I love them, but I always like them, so I understand that too.
Fully understand that.
So some of them sometimes they can make them be stressed, and I'm sure I bet the same for them. But being a big brother, I can understand this. But even if this wasn't on the internet, there's a lot more I would say. But I understand it. I hope they figure it out, and I just want, no matter what else, that situation is, you can't not saying that they did this, but there can't be any disparate points between your shareholders. You have to, I am for the market. You have to tell everybody one time. Better you call a press conference, lay it out, stream it, and then
you only let certain people ask questions.
No,
but
you can't
other
do
people
that
at least
either.
can go there.
You can't do that. You can't do that either. But you could stream. There's no requirement for you to stream, for you to take questions at an earnings call. It's just at an AGM. You can't go around it at the AGM. Although some companies try, book it at certain times, some convenient times, or make it not streamed.
Yeah.
Or you know, you ask 10 questions and they take 2 questions and then done it quick. But even that, as much as that's a stretching of the law, is still following the law and the rules. I think they should have streamed it.
They did stream another briefing though. Like I think they did one with Mayberry, maybe like a day after or something.
They did, but again, it's a day after, right? Yeah, and you look at the trading volume. You look at JBJ, you check the trading volume and the trading incidents, like the amount of trades, the average trades. Remember, this meeting would have happened on the. So the average trades from the start of the year 2025, the average daily trades from the start of the year to March 26 was 23 trades a day. And on the 27th, there were 68 trades, and the article came out the 28th. So that's kind of disparate, right? No, again, as we said, the results came out the morning of the 27th. So, and the results do speak to that term I use. It's not my term; it's their term. Corporate management identified a number of issues related to expense management and operational controls in our U.S. operations. I spent some time in audits. I know what that means. And I'm
sure Barry isn't happy, because if you meds, this is now, I think, their second largest holding.
That's what I was saying about berry companies, like.
And then also, I think they have pledged the shares and something, or like they had margin the shares essentially. So
who, Mayberry?
MJE, I think it was like one of the loans or whatever they did. So yeah, it's a big part of their portfolio. This is taking a hit, and we don't really know. Like, one of the things that was said was that I think one of the articles actually alluded to possible like more losses or something. So it's like, okay, it's almost like a situation where I was looking at it with remember, like we were saying, Dolphin Cove, and then like there was that initial dip, but then certain information came out. The chairman, well, I guess at the time, previous chairman was saying, "Yo, I'd buy the company. I can find the money." And like I knew the Q4 would likely be bad. They make a loss every quarter 4. So it's like you've seen that second dip. So even for me, looking at broilers, I was medding, maybe someone wants to defend the price of this, but I was like medding, should I go in now? But then if the Q4, if there were whatever their next quarter is even a worse loss, and then there's more articles coming out over time, it could even drop more. So I was like saying, and when I looked at it, I was like, that risk, I'm not comfortable with that risk. It could be profit for someone who's comfortable with it. Just like we're mentioning the TransJam thing. Like I saw that profit point and the same things that Thaon was talking about. I think we were saying that when it's when the initial offer sale comes out, people would panic, and then if the dividend notice comes out, you can make money there. But I was like, I don't really feel comfortable with that. At the end of the day, it's not like, it's just my choice. I didn't want to do it, and someone did it. They made money. Good for them. And yeah, it's just you have to know, I guess, what you want or what you're you
don't have to win every race.
You have to bet on every horse.
You just have to win the race that you're in. You don't have to enter every race. Or as everybody loves Buffett, how Buffett says is that I think it's something about swinging. Like I don't have to swing after every ball, right? I just have to hit the ones that I swing after.
Oh yeah. There's a good analogy. He was saying that if you technically say in your lifetime you could only make 5 investments, most people would make much better investment decisions if they could only pick buy 5 companies.
Yes.
And because you would literally spend all the time, like if you just had way less choices versus you can just buy, sell. It's like versus just, this is the only, or imagine if you could only buy one company for the rest of your life.
Then what I think he wanted to put across there is the idea of the amount of effort and weight that you should put on a buy decision. You need to have a really good reason to buy, to enter the arena of a stock, right? I cannot be hurt by Trans-Jamaica losses because I sold Trans-Jamaica. Anything could happen to it. Of course, it means that if it spike, I don't get any other Trans-Jamaica benefits, but I'm fine with that. There's 100 more opportunities out there, and there will be 100 more after that. But the second I go into something, I'm now at the risk of the thing. So I should be very, very, very careful about how I enter the risk of any investment. So I respect that move with JBG. For me, I already had JBG as something I don't need to go into. It's a $35 stock. It's not going anywhere. It's a $35 stock. It's spent the time at $35 level. It is, of course, in my view, it's under, I have it tagged as a berry stock also. And the Mayberry Forum, I believe, I have a little group meme where I think Gary appeared. I don't know if it's that he was speaking about. Well, he said, buy. Because, it depends on what your time horizon is. If you think like whatever has happened with Jamaica Broilers, they're still Jamaica Broilers. Next year, they're good, right? They might have to take a hit. But remember when they took the hit? They took the hit, and what happened? They kept trucking, right? Hits come in business. Is how you deal with them that matters. And like, I don't think that they're necessarily in a bad place to deal with them. But I see the share price at 26. It has not been at that level since the last 3 years. Maybe 2022 is the last time it was at this level. Yeah,
time machine.
Yeah, mid 2022 is the last. Yeah, exactly.
Yeah,
it's a hell of a. It has not touched these levels in a long time. 2020 was at 24.
Jeez.
For you to go back again before that, you have to get to like 2018. It's a hell of a thing. I hope, and this is the investor talking, like I'm seeing what they're showing here. The auditeds are due. They know that there's a big box to come in the audited. They're probably going to have to restate some prior years. They're going to have to answer some hard questions.
Wait, this I should show. So in one of the same article, there's this same one that said, I think it's written by David about a repair job. On Thursday, Christopher Levy declined to give additional comment on possible restatements to its prior audited numbers.
Shout out to David. He has been helping me to make profit on the market now for years. Shout out to David. This article too is
Imagine this with shorting.
Hey, listen, convince a broker to start offering it widely. But that's who has to take on the risk, really. And they'd have to put up together a system to distribute the risk, because you don't want them to have to actually take on the risks. It's a system of you really selling both sides of the risk to different parties. So like I could see, I don't know who would offer puts on JBG, but you don't even need, I should say you don't need shorting. You do need shorting. The market, any market that doesn't have shorting is a ticking time bomb. It can blow up if you don't have shorting. If you do have shorting, it's the market won't blow up. Read JBG and the idea around it. I know there's such a big hit to come that I wouldn't necessarily go in yet. I'm hoping that it will fall more. I don't know if it will be allowed to fall more, but I am hoping that it falls more. But even this price is a great price in my view to go in. The truth is, I don't want to go because I'm not in. I don't want to jeopardize future Randy with handicapping myself by laying out anything too clearly. If you think JBG dead, cool. but I'm sure they have some big hits to come, and I'm sure there's gonna be more eyebrow raising moments to come, especially after the audit comes out. Especially after the audit comes out, and if there's restating of prior quarters, which there must be. In my view, there must be. I hope I'm wrong, but there must be. And that raises significant questions. But even with all of that, let's say, God forbid, but let's say that employees thief and them embezzle money from the company, and let's say hypothetically that happened, and it's terrible, and there's a whole little stealing ring, and they were selling eggs on the side because eggs cost a whole heap in the US, blah, blah, blah. And it blow up JBG books. You think we're going to buy chicken in 2027?
One of the things I was just looking at, the buy queue, you realize it's not, the queue can change at any time, but there's not that many, like it only takes like 1.5 million to part the stock down and send it to 22. You know, it doesn't take 2.5 mil to go to 20. So yeah, this will be interesting. This could actually be a decent DCA stock over the next
no doubt
3 years.
In my view, anyway.
Yeah, or at least
In
the
my
next
view,
year
3 to 5. Yeah. In fact, even longer. Again, they sell chicken in Jamaica. They sell to KFC.
See,
Right. And they have an arm in the US. If the WTO, if the if the chicken import rules in Jamaica change tomorrow, my bet would be on them, JBG, to survive the most, because they have an arm in the US where they can ship. Everybody be shipping cheap chicken to Jamaica. We saw the effect of one container on the beach, cheap chicken, right? But JBG is able to send containers to the wharf from their US arm, so you would still be able to get the same brand that at a much lower price because of the US arm. Would the profits be lower? Maybe not. Who knows? But I would bank on JBG to survive above every other chicken company in Jamaica. And since they're listed, I mean, they're the strongest in my view. I hope the other guys come to the market to Caribbean Broilers.
I highly doubt that.
Well, pressure bust pipe,
That is also true.
Yeah. Trump bust more if that protection falls.
If that, that is true.
They're under serious stress. They're under serious stress. I would, for selfish me, I would want the protection to fall, because one, people get chicken for cheaper, and two, it would force them to the market. Come to the market. Come to the market and then figure it out. I'd love if they came to the market. Love it.
Yeah. So the thing is, with something Preston and I talk about, and we say it's regular, is like, it's always good in terms of opportunities when companies go through these negative times, because as you said, it's a time machine, Preston. We're going back to like COVID days where we'd never see this price before.
Pre-COVID.
And yes, of course, pre-COVID. And of course, it's a bad thing for the company, but you're listed and there's
it's not really a bad thing for the company either.
It's better you fix it up, you mean? Like,
company don't care about the share
finding
price.
this out 10 years ago.
Oh, well, the way Randy says it, true. Company don't care about share price.
Company don't care about the share price. The company don't know what the share price is. The company literally cannot buy its own shares. Any shares the company buys under the law, the company has to cancel. The share price is not, it has nothing to do with the company. The share price is us retailing, us investors, not just retail. The share price is us investors' view of what the company is worth. That is a different thing from what the company is actually
worth
doing. No, but no, this is what the company is worth. Because think about it, you don't determine your worth.
Oh, yeah, true.
I can think that you are worth whatever. It doesn't mean that you're actually worth whatever. No, you can create value that's at a level that I am wrong, because somebody else see it and they're like, wow, this thing is worth $1 million, but I thought that was worth $10. But that doesn't mean when I said you're worth $10 that you're worth $10. That's just me selling the shares at $10. Somebody else grab it at $10, and then next month when it's at $1 million, then bingo, and I get hurt. But again, that has nothing to do with the thing itself. The JBG numbers will have, I'm sure, some effect. And I hope I'm hoping that it tanks the share price, because I want that would make me buy it. That's probably the only reason that I'd buy it, because I don't expect any rapid increases in it.
No profit or anything.
I don't expect great cap gains from it, but pressure bust 5. Man, I love when bad things happen to companies. You're not going to kill the company. I'm going to go through it. Can you imagine 5 years from now? Can you imagine Kintire with funding? Think about that. Think about that. As we laugh and we've seen the things that Tyrone has gone through. But think about it. How many companies, whether or not they're even real companies, are that great? How many companies has Kintire bought in the last 3 years?
They are pretty aggressive. Very, very
Pressure
aggressive.
bust pipe. They man buy Seven's restaurant. I feel if you stop at the stoplight for too long and the windshield wiper that them try buy them to and list them. Pressure bust pipe, but that's the thing. Who else is doing it? Because the people that have the money not doing it.
That's true.
They're not doing it. They're not doing it.
Man, just
and they're doing it sort of. They're doing it sort of. Not that brought it back there. Look at lumber. Not lumber. Well, lumber. Look at HPC. Look at Atlantic. Right? Look at what Atlantic actually is. That's private equity. That's private equity move towards a listing. The thing didn't even need an IPO. The thing was guaranteed from the jump.
Yeah.
The man makes sure bread butter both sides.
Both sides indeed.
Yeah, in but all the back too. But look at Tyrone. I'm sure Tyrone would have loved to capitalize on the ICE situation or do what he's doing with the sign company and all of that stuff. But him don't have the funding, so the less money him have to work hard. Him have to work in the face of people laughing at him, which is hard, I'm sure. But say, you chose to jump into the arena, so you face it. But love him or hating the man doing it, and not many other people doing it. So imagine him 5 years from now having gone through the fire with funding and saying, hey, I'm still doing what I'm doing. He's turned the company into an investment company. I think I'm going to that's also another interesting, but we've been talking for so long, I don't want to go into too much. It's just there's lots of interesting things happening on the market. The market not dead.
So much.
It's just, there's so much profit being made on the market. So it's just, some of us have learned not to talk about it as much publicly anymore. Just make it stay. But the market nice and continues to get nicer.
We're expecting a lot of listings this year and over the next few years too. And like with the junior market listings and offers too, like if the junior market limit gets raised, if it doesn't just apply to new listings.
Yeah, if the limit gets raised, I expect to see some second raises happening because a lot of companies came to market.
Secondary offerings.
Rights issues. If you as a junior market company choose to do that APO, then you're digging your own grave. So
all the best.
Yeah, that's one of my greatest fears, my brother. Can you imagine I own? Hey, I've gone through that fear. The second, same. Yeah, man. ISP, at their last AGM, the chairman said that they don't know what they're doing, but whatever they're doing, they're more likely to do an APO. As him say it myself. At a loss, I don't care. It was at 20 or something at the time. Sell it to 21. Sell it at 20. 90, 18, 70. If I don't mind sharp, I send it to 2. I don't care. If you do an APO, everything's going to die. You're killing.
Yeah.
But he's making his decision from the perspective of running his company, and he's not really thinking about the share price future stuff. Yeah. But I have to have a choice because that's the arena I'm in. That's the arena we're in.
Exactly. The same with energy for me. Like as soon as the man them starts say APO, I just start downsizing because I'm just like, this don't bode well for me. And I mean, I still ended up in profit because I sold the last bit recently, but it leave a sour taste in your mouth because you realize what this could be and what it was gearing up to be.
Yeah, imagine if they had one, or the company that they bought, if they had one, because they submitted a bid.
Yeah,
like imagine if they had one the 50 megawatts.
There's a second one to come.
Yeah.
There's a second one coming now, and there's another one next year or two. Yeah, and a second one next year or two. And the companies that do win also they don't have to, but it only makes sense to partner with companies in the space. There's too much, our energy needs are too much for established energy company like that to not be able to eat a little piece of it. And it's being compared to nothing from before. Look how easily the man and profit set up now. They finally hit that inflection. Well, I hope the inflection point that I've been waiting for the last 15 years for. But I'm not jumping on an APO ahead of time. Are you mad?
Yeah.
Mad. No way. I'm good. And
even look at Wigton, because Wigton won the bid and they've done work with energy before, like IEC.
But you meant Wigton I've heard say stuff about APO though. I've seen it mentioned like 2 or 3 times, like by Mayberry.
I've seen a bit of a hint of it, but I haven't actually seen him go that far. And again, Mayberry has not actually done one.
Name? There was a briefing. Yeah, that's one of the reasons. So on the site, like I think it was. I'll try to find a clip if I can too for the viewers. But I think it was Rachel Curlew, and I think she works in
she's
like investment banking or whatever.
CIO, I think.
And she was the one that I think had mentioned, if there's possibly an APO on the horizon, like we would see the. I'll try to find the exact clip if I misquote.
I think I know the clip you're talking about. People send to me in time, nobody even breathed the word APO. My hope is that Rachel was just doing that thing that people do. Like even I slip nowadays and say APO and I mean something else. It was great marketing.
I think it's more than once I've heard it though, and I'm just like,
yeah, well,
it's.
It would be
I don't know, but then that would be the one side. But then the other thing is that when I look at MJE and kind of like how they're in some ways in the same arena as us, like share price and stuff like that, then I'm like, would they really want that? So that's the thing. I guess I'm not
Well,
I don't like that. I'm hearing that.
I don't like it either, and I've wondered the same thing. I can't speak for them, but I also don't doubt that if there is an opportunity for them to make more profit from doing that APO, that they would do it. And I don't believe that they necessarily mind having a stable share price. If you look at the if you look at the fingerprint of how they approach the market, they don't mind those nice, predictable swings in volatility. They manage.
The other thing I was looking at, though, if you mentioned the big shareholder who entered, was it Cacao Holdings, and then that's like a part of InterEnergy and whatnot. I was wondering if like, depending on how they structure that, like if you look at it, to me, Wigton.
I've looked at it a lot.
Okay, Wigton has a big possibility Wigton has like a huge possibility of getting energy, like in those different bids. We say whatever. Like right now, they have 60 megawatts.
They got that major one,
and then the 150. The more recent one I heard was it was upped from 168 to I think 220 megawatts. I don't know how that will be split up, but that could be an additional 50 megawatts or so, or even more. And then, there's a huge amount of energy for them. But then when I look at InterEnergy, the InterEnergy group is like really huge. Like I think I'd have to look, it may be like almost like 1,000 megawatts or something like that.
They're a
renewable energy.
They're massive.
So then I'm like, something like this with their tiny stake in Wigton, which is, it's like, it's somewhat kind of tiny. So I was like, for them, if they want to buy a stake in the company, I mean, they could buy from Mayberry, but Mayberry doesn't want to sell. I mean, he sold them like a piece for them to enter. But then I'm like, if they really want to...
No, continue.
I'm just thinking that if they really want to, get into a significant stake, then that's where they could say, an equity raise. And then I don't know if it's like they structure the APO in a way where, okay, they actually like buy shares on the market after to like support the share price. I don't know.
Why would they support the share price?
To me, though. That's the thing. That's the thing. It's a pipe dream to me. But I'm just like,
something in there.
They probably would book it that way.
I think that there's something in there, though. I obviously pay a lot of attention to Wigton too. I don't see it quite the way how you see it. I do. I see it very plainly, very clearly. I mean, he sold them, right? He allowed them to enter. And there's also certain restrictions on certain movements. Wigton is an energy company. If you read, not just that, we read Electricity Act. And MMJA, some companies, if you check the other section, we also have the laws that cover those specific companies. So like JSE, we have the market laws. This JPS, Wigton, we have the Energy Act. If you read Electricity Act, there are many things including like you can't just have a power producing entity in Jamaica and just sell the shares. It's part of the country's there's a term for it. It's like why you doctors can't strike. What is that? You should not laugh at that.
No, I
should not laugh at that. It's essential. It's an essential service. Sure. And majority, you guys have been sick. It's funny. You guys are the ones who determine if you're sick. It's an essential service. So you can't. A country can't or shouldn't allow their essential services to just be easily pushed aside like that or easily traded. It matters who owns it. So I don't believe that shares, I don't go too deep into it, but let's just say that think of how long it was ago that I've been telling you about InterEnergy. And then they own like what now? They own like 5% of the company right now. I think they own about 5% of it. Yeah, they own 5% of it. And I think they're probably gonna buy more. And they they meet the criterion that they are an actual operating entity in the energy sector locally also. So they have did they buy like another solar? There was like a solar farm or something like that they bought, or more than one.
I tell people, if you do the
research, grow means grow rich with research. Do the research. Yeah. That's what I tell people. Do the research and you'll find some very interesting things.
Even with JP,
Just do the research. I have been waiting for JP to list for a long time now, for maybe 4 years now. I've been waiting for JP to list. They've been acting very listish for the last 2 or so years, very structured in their layout or their website, how they speak, their CEO. I tend to look, sometimes I think at a glance at their CEO looks a lot like the energy CEO.
Yeah, I just thought about it when you said it. Wow.
yeah, he looks a lot like him. I don't know if they're related or not. I haven't checked, but they remind me of each other a lot. But JP, but in the space, JP is the Messi and energy is the corner league. No knock to energy, but yeah, JP is a massive thing. And I hope that they come to market. No, would they do an APO? It would hurt me. It wouldn't hurt me because I wouldn't be in there. And what I think, but maybe I would do an APO. I think they'll do an APO if they think it's the best thing for them. If they say have much longer, they're thinking They're the driver of their vehicle. They're going to do what's best for them. And you only have to stick around with it if you think it's right. No, they haven't done one before, but I don't think that they wouldn't do one if it works great for them. I think that they would. And I think that they might. But I'm not going to, there's going to be a lot of signs if they do it. Point I should clear up earlier. You said it, Thaon, and as one thing too. JBG is not part of the collateral for MJ.
No, there's a separate loan, not the June one. You know, there was another one. It was me that said it.
Oh, okay.
There was an initial. I think it was January. There was like they borrowed money in January, and then I think they borrowed money in June. The June one is separate. The January one, I think that's privately, but in the same documents. I don't know if you have it up. In the, I think it's like this one of the pages, it shows you like they pledged some other shares.
Yeah, that it's part of that. They have,
I think they pledged Broilers, CPJ.
The 2024 fixed rate notes had 25 million JBG in it, but it's a 2024 notes. No, sorry, it's issued in 2024, January 2024. The MJE fixed rate notes. So yeah. The driver is going to do what's best for the driver. I don't doubt that the driver is going to do what's best for the driver. So I don't doubt that there is 25 million units. I don't doubt that there is a limit that the shares will probably not be allowed to fall below because it'll be in their best interest to get it if it's below that interest, right? And
especially like maybe end of year.
Yeah, or whenever. Shout out to Tryon and those guys who made a lot of money.
It could be a stocks watch this quarter then.
Almost certainly. For me personally to enter, I would want to see more overreaction. Even though the price rate is now, you could bank on that as a bit of an overreaction. But because I know that there's news to come, like you said, just like Dolphin Cove,
when does the report drop? Actually, did they give a timeline on the? Maybe could actually work that out. Did they give a timeline on when the audit's
due?
Is that the next report or that's the audited?
But that's the one that matters for JBG. The next one is the audited. So it's due the end of June.
June
29th is when it's due. Obviously, they can go earlier, but
so imagine
June 29th.
Imagine that dropping like 2 weeks before that. It drops to 20. You buy it at 20. And then
it's likely it will be delayed.
But isn't this another delay though? I think it was already delayed. Or
no, man. Their quarter ends April.
Dolphin Cove.
Their quarter, Jamaica Broilers' final quarter ends the end of April. Actually, they do a bit of...
No, I'm mixing it up with Dolphin Cove.
Yeah, okay. Man. Dolphin Cove is well delayed. Jamaica Broilers isn't delayed at all.
That June one actually that probably will be pushed back then.
Yeah. I don't know if it'll be pushed. I wouldn't be surprised if it is, but I would...
If they have to restate, wouldn't that maybe push it back more?
Maybe.
I don't know.
Jamaica Broilers...
It's the kind of question you could have asked at the investor briefing, I guess.
Maybe, yeah.
But they wouldn't answer.
They don't have to, and I don't wrong them, but they have to answer the AGM. They have their stewardship is stellar, in my view. Top level stewardship. So I would not be surprised if their audited is not late. I would not be surprised if their audited is right on time. I am under the impression that it's very rare that an audited result, or any result as a matter of fact, but audited results especially have to be late. I am just under the personal impression that oftentimes companies choose to push for the delays for whatever reasons. I think there are like 2 or 3 of them right now that they're delayed to the end of this month, and I expect them to do one more delay to go 2 weeks into May, because that's when their next quarterlies are due. And then surprise, when we have a better quarter, we drop the bad audit. Oh wow! You ever notice how it's always bad results that are delayed? Good results never delayed yet. You ever notice that?
Never. Yeah.
How come the auditors
sometimes come early?
All right, exactly. So it's not. It's companies lie, CEOs lie, but I don't think I wouldn't be surprised if JBG is on time, because I think they know what it is. Yes, they have to do a bit of trace back. They have to get it all out. Yes, they might have to restate things, but we think these guys are only a multi-billion-dollar company, and why we're not sure? No, them know. Look how early them call the thing. They look how early they call it. They're way ahead of the audit, because they know, say, this audit is going to be a wicked hit. So yes, they could have a delay. And they're in a case where I could understand if them have a delay, but I don't think they really have a delay. I wouldn't be surprised if them report right on time and then face the music and then them start fixing it.
You guys 20 to 22.50 is 10%.
Oh, you'd have to talk to me about percentages, bro. yeah, you have to talk to me about percentages. I know. January 30th of 2024. What was JBG's, or the last day of January? What was JBG's share price? 2024?
2024.
31st. It was 33.
Yeah.
That's what it was. 33.
Yeah.
Yeah. Do you know the date that the MJE fixed the notes issued in 2024? You know what date they were issued?
Is it end of June?
No, it was issued in January. You don't told me about them.
That one. No, I don't know it's out of my head. Does it say?
No, but I'm sure you can find I'm sure you can find it if you dig hard enough. I'm sure you can find if you dig hard enough and find what
January 30th, 2024.
That's when it was issued?
Yeah, based on it's a date. It's in the same document, material contracts. The contract started January 30th. I should probably pull it up on my screen because it says the date. So when it matures and expires January 30th, 2026.
Ooh, okay. Well, hold on. Secured note program in amount of 2.2 billion as follows: 749 due the 30th of 2026. So okay, so the fixed rate come down a little bit, or scroll down. What's the next?
What was the next page? Hold on.
Yeah.
Oh, this is a 2016 loan.
Yeah, been voluntarily disclosed. Okay. So the point I'm trying to put forward there, trying to hint at, is to the JBG is important in regard to this because it secures it, right?
Mm-hmm.
So that gives you a bit of a range. That gives you a bit of a range. So I wouldn't, and these guys have not had any. I have no record of them not meeting their payments, and they seem to take their things seriously. There's no shareholder meetings for them to explain why they won't pay out their debt or whatever they've been paying their debts. So you can maybe bank on that a little bit. Of course, anything can change, but you can maybe bank on that. And so there might be opportunity
to do that versus, I guess I was talking to our brethren, I was saying here to look at that versus like a SBL, and then I'd have to look at the price I could possibly get it at that time to say, okay, what margins? Because then I think SBL is a larger portion of the portfolio and stuff. So, but then you also have to look at, okay, what price, and then it'll be interesting still. So
it's very profitable.
It's
very profitable. Yeah. That's all I'll say. I saw shout out to the girl subscribers. I saw what I did in Q1 of doing that calculation.
When I look at how much traded for SBL,
millions,
it was a lot of money. I was like, holy crap. I made some, but I was like, damn, I could have even put your whole portfolio in there.
Boy, listen, I would not bet the farm. Bear in mind, Barry's in the market also. He's no fool. Right? Christmas don't come every day. Right?
But so, like 18 or 19?
You think 19? You think you would. But when you get to 18 or 19, you would. Oh, you mean at 18 or 19 or 18 or 19 million?
Yeah, I'm saying, no.
Oh, okay.
Wait, no. I'm saying whatever your money is, depending on like your goal and stuff, putting everything in at 19 when it was,
what would be a safe bet?
I think so, because if it's not, you have time, but it depends on your timeline though. Because
shout out to Sean.
So say you're hoping for to who?
To Sean.
Oh,
he knows himself.
Yeah.
That's all I'll say. I'm not saying you're wrong. What you're saying is 100% correct. It's another thing when you do it. Doing it is another thing.
No, man, I was watching it. I remember I was on the phone with my brethren, one of my brethren, when it was happening, and like I had set my price, and I said, "Yo, this." I'll tell my sister, I said, "Yo, this is why it go happen." Buy it. And she said, "Yeah, man." She buy it, and on the morning it was gonna happen. I said, "Yo, I go change my price, And I said, "Yo, change your price too." She said, And I said, "Why?" I look at it. I said, "Yeah, man, this is it." And I watch it. Big up, pull up my money JA with a live data, and I was like, yo, adrenaline. I was literally was sweating when I was seeing it coming in, because it came in at the last minute.
Not last minute, last
and
seconds.
I was like, 20 seconds or something like that. And like my brother was like, bro, you shouldn't have put your order there, dog. You should have go. And I was like, no, man, I worked it out. I believe.
Yeah.
And when it got, I was just like, yo, literally screaming.
Yeah, when it work. When it don't work, it don't work. And the thing is, you don't know.
Yeah.
There is no knowing. Depending on the kind of play you're doing, there is no knowing until it happens. The kind of nerves it takes to sit down and watch
Yeah, I can't do this all the
$20
time.
million.
Like I just started.
You don't know at all that it happens until there have been quarters for me at least and months, because it's not just MJE, there's other funds in the market. You don't know until after the market closes. So there have been times when I don't even know. I don't know what happened until I see close a certain, where I see a certain thing and I go, wait, that must mean my thing trade. That's when I know. So you will.
So you never set an alert?
Yes, but no. Well, me no, because usually I'm watching it. Usually I'm watching it, and I don't like that sort of high adrenaline stuff if I can avoid it.
It's already very like I've done it. Yeah. I did it December, and then I did it March. I may do it June again, depending, but it is. If I did like the price I set it at, I was like, I kind of got out near the peak, and I was like, even though it was good in a way, I was like, I shouldn't be so risky next time. Just be much more conservative, because I was like, that was something that I felt good at. That I realized that I was like, okay, even though I made the play, and I was like, but I got out very, very fine margins, and yes, like. If you do that, like if you repeat the thing 10 times, there's a where I don't get it. And then I'm like, at the price I was getting it at, I was like, I'd still be, I could probably actually sell now. And even I think got a dividend.
Yes.
Got like a little dividend and thing.
Because SVL is a consistent dividend payoff. So if you're doing an SVL play, it's just, your grandma said every day bucket go well one day. Like it almost, I've been there before. I've been there watching the play and so it's really not happening. And it just don't happen. Yeah. You're not stuck. You're not stuck per se. Right? Yeah. Depending on what the stock is and what the play is and what you're going, you're not stuck. But you might not get the profit you want, or you might have to hug up a loss. Yeah. Yeah. There's many a lesson in this market. There's a lot of money being made by regular people in the market quietly. And I like what you just said, because the lessons are being learned there. I remember getting to that point of being to where like, it's not that I can't do it. I can be very aggressive in the market. What's the point in making all this money to have to do that?
Well, one of the things though is that go.
No, I was just saying, that the bigger money in the market doesn't
do that.
The point behind getting this kind of money is what I call time and space. You give yourself more time, you give yourself more space to act. Look at Atlantic. Look at that. Just look at the Atlantic hardware listing. That is the ultimate. It don't matter. Like that's a seal up thing. We're only doing 100 million to the public, and we're underwriting the entire IPO. Can you imagine? Like that is PB Scott and team removing all doubt. But if I market it, it have a list. Moreover, I'm just opening a brand new high rise. Of course, I want a hardware. I don't care. And that hardware is at 85 cents, 86 cents.
I was actually planning to double dip. The plan was, because I think when I had worked it out, I would have just sold the SVL. Because the reason I went to the SVL was that I kind of had cash at the time. Because like, the stuff I could buy, I was like, when I made it, the percent I got, I think it was 10%. I was like, the other stuff I'm looking at, nothing else is going to give me. I already have the cash, so it's not like I'm selling something I'm already in. So I was like, okay, I'll do this. Bam. I did it. And I was like, Atlantic is going to list. I was like, I could take the 10 and then go 10 again. But then it didn't reach the price I wanted. But,
compounded.
Yeah, compounded. Yeah. But then once again, it's funny. So I've been learning that, I do agree with your point about the time. So it's not like I'm literally sitting at it the whole time and checking the cues and whatever. There was, I guess, that one part when I was like, okay, I know it was going to come in. And I think I checked it like 5 minutes before, because I knew that was going to happen. But it's like I bought it 2 weeks before. I didn't look at it. I was just like, I'm good. And then bam, that time. I'm trying to work on my process so that I, like even something like setting orders in the buy queue now, like even waiting. Like I never used to do that much, but I'm realizing that sometimes I can actually, like, there's some queues that you can in a way exploit. Like I think my QWI, I bought some QWI recently. I had that order sitting. It wasn't that long though. Maybe like probably under a week. I got some at maybe 78 cents or so. And there's other stuff that I'm looking at.
You're on the same road. Meaning the road of also not famously not a queue sitter. I buy what I want, I sell what's there, and I plan my moves around expectations for what I want to be there and what I want to always be there, right? I work with whatever is there. So I'm not like a sit down in the queue kind of guy wait. But now where I'm now, I'm like, the same road I'm down, where I'm realizing, sometimes it's fine to do that. I've been doing that. Why not just leave it there? Who knows?
Yeah.
Alert goes off and damn, Order was filled. I mean, I really got it for this. Some slow plays.
Yeah.
So everybody running on everybody loved the 7-day. People love the 1 month idea. And there's nothing wrong with it. You can do it, but those are hard. Those are at the peak of difficulty. A 1 quarter play is lovely. I can lazily go in and I can lazily exit, and I do it again and again and again and again and again. And if a 1 quarter play is easier, 6-1 play is easier, 1 year play is easier. Yeah. And so I look at the people who are truly actually doing 2, 3, 4, 5 year investments. And those on the JSE is almost unfairly good if you're looking at a 2, 3, 4, 5 year thing. Yeah. Can you imagine if you're looking on a 10-year investment, listening to this and hearing people debate whether or not they must go into JBG at 26? 10 years from now, in 2035, right? They're looking back and they're like, well, it was such a dumb decision. It was such a dumb conversation to have. If you're looking at a 10-year
Dolphin Cove at 12.
Or Dolphin Cove at 12, right? Who's not going to want to swim with the dolphins?
Real.
Who's not going to want to say, you go a little further, like, oh, the owner is in trouble? Well, the owner is in trouble. He need money, right? How is he going to get money? Yeah, you can pressure the company with expenses, but you also want some cash. You might also want some cash outside of the troubled companies. Yeah, what's the only way to do that? You're going to have to pay a dividend, right? And maybe you don't sort it out. Maybe you can't do that. Maybe somebody takes the company away from. Maybe you lose it. What does that mean? Dolphin Cove? No, it doesn't mean somebody else own it. That's all it means. And if I own a bank and I couldn't collect on your debt, so I had to take your collateral. Well, what's the collateral? A dolphin company in Jamaica. What's the retained earnings like? I put money in, I want my money out. Well, let's squeeze that money out. Let's get that return. Let's bring how much you retain earnings? How much do they need to run? If I'm a bank, they need $1 million to run a year. And then how much in retained earnings? 17 million. Well, we're going to, over the next 2 years or 3 years, it's like aggressive dividend schedule. We're doing 17 million worth of dividends. But what about running cash? I'll give them a line of credit for $1 million. Yeah. And those are decisions that are actually made in the actual real world. Check it. It happens all the time. That at worst, if I don't care about it, I don't care about Dolphin business. I'm trying to get back the 2 million I lent this guy. I had to collect on it. But the thing I collect on, I can squeeze 10 million out of it. Oh,
yeah.
Of course I'm going to do that. And so that's the reality of the market and as market actually, and that's my thoughts also on Dolphin Cove, which is one of the things that I said. I don't know if it's at this quarter thing. Anyways, next quarter or later in the year thing probably. But well, I give you guys a lot of my own this quarter thoughts. You already hear me, and we start off with like a nice clear one, the GNAC.
Real talk.
Yeah. So we're going on for 4 hours though.
So we have, right? I don't know how we would have ever stopped if we never got to this point, but thankfully I'm taking the conversation by the reins. Thank you so much, Randy.
No problem. Yeah. 4 hours.
Yo, honestly, 4 hours is insane.
You know, I knew it was I know we initially had set, I think I said 2 hours. I was like, this is not going for no 2 hours. And I had to say, yo, he will try push it to 3. And I was like, this is not going for no 3 hours.
I honestly thought we'd make it to 3, and then we just kept going. I'm like, wow, yeah. I mean, the market is that exciting, though. Like, honestly,
and there's stuff that we just haven't touched.
There's so much we haven't touched. I have actually don't mind of stocks that we didn't touch, but that just means the next conversation should be exciting. Should be
even better. Yeah, man. I'm always happy to have this. I should say, I don't want to forget. Thank you to you guys and congrats. I know you did your 3rd year. I mean to actually say to you, and I saw my reminders here. You're in your 3rd year. You did it for 3 years now, so. Congrats. I'm glad that you guys have kept doing it. I'm happy to see it, and I want 3 more years from you guys. The consistency is great.
Well, we have no plans on stopping. So
yeah, man,
we're just going to keep it up.
Don't be like me. Keep going.
Yeah.
I mean, different circumstances, but you know, you have a huge company to run. Guys,
not
if
yet,
you guys
fingers crossed.
well, he's underplaying, you know, modesty, but remember, guys, code Limitless. My Money JA gets you 10% off. So yes, guys, it really helps out the channel. Thank you guys so much for being here. Hit that subscribe button if you really love this, because we literally spent 4 hours just chatting content just for you guys. So the least you could do. You know, the least
profitable content too. I mean, the sort of stuff I talk about, this sort of stuff all the time. All the time, but it's in that group where it's subscribers. You want to join the grow subscription? Check it out, everymickle.com/GRWR. Hey, if not, you have at least heard a lot of my thoughts and these guys' thoughts around the same things happening in the market. So I love it. Yeah, the market is nowhere near dead. It's growing. It's better than ever, actually. And just like you, Matthew, there's stuff we haven't touched that I'm happy we haven't touched, because I'm not trying to get competition in the market too early. Yeah.
Real talk. Thank you again, Randy.
No, thank you guys.
Thank you again, Preston. Blessings, Limitless out.
All right,
Peace.
big up. Yeah, man.